Our friends over at ACAP are hosting another trading competition for A1 trading fans. If you're interested in testing your skills against other traders in the community, here's how you can join. Head on over to contest.acap.com, you can find the link down below, and select the A1 Trading Demo Competition. Registration is open now and ends on August 19th. The competition will also start on August 19th and ends on September 2nd. You have the chance to win prizes for first, second, and third place finishes. All trading will be done on demo accounts, so there's no risk involved in the competition. Sign up now for free and good luck.
All right, guys, good morning. Welcome back to another live stream. Today we've got CPI, the big one. Yesterday we had the producer price index, which, to be fair, PPI and CPI are like arguably similar importance. It's just that a lot of times CPI goes first. And the reason I say that is because, you know, if you're studying the producer price index and the consumer price index, and you're studying the outputs of those figures, what you'll find out is that the producer price index and the consumer price index share a lot of the same variables. There's some, differences in inputs, but the outputs of these two inflation statistics are largely made up of similar variable lists. Does that make sense? Yesterday, we saw a big pop in the stock market. We saw a nice run up in, the NASDAQ. Tech stuff really killed it yesterday. The question today is, can that follow through occur? See the Japanese stock market down by 0.6%. I've been looking at this a lot more than usual recently just because of the craziness of last week. If you're looking at the Japanese yen continues to stay steady at around 147. The dollar index just slightly lower here, but looks like, guys, it is teetering on the edge of a cliff here. If you get the CPI coming in very light today, meaning cool inflation data, it is very possible that the dollar will take that as its final kind of checklist item to continue the move lower and maybe break that 102 level that we discussed yesterday. So you're saying CPI is likely to be lower than PPI? No, Daniel, I'm saying that a lot of the move that occurred yesterday was the move that was also potentially going to take place in the CPI. You have to kind of think about, like, if PPI and CPI have all these secrets, right? They have secrets about how the economy is performing. The producer price index leaked a lot of those secrets yesterday. They leaked some cool inflation. That being said, there is still the possibility that the CPI surprises us, and that even though the producer price index, which showed a lot of inflationary stuff, is cooling, it could still occur that the CPI has some variables not included in the producer price index that cause some volatility, right? What if the CPI stays the same as 3.0? Yeah, that's a good question. So let's talk a little bit about expectations here today. So the consumer price index today is expected to come in on a year-over-year basis at 3%, unchanged from the previous one at also 3%. If you get 3.1%, which is highly unlikely but possible, right? This would be Bear City, right? The Bears would love this. They would jump up and down. They would start crying tears of joy, because 3.1 would mean stock market lower, most likely. It would not be fun, right? Can you tell I'm a little biased here? If it comes out at 3%, I think that's just okay for the bulls. We'll take that. If it comes in at 2.9%, people are going to get really annoying on Twitter with their bullishness. That's how I'd break it down. I think that, I'm bullish myself, so I would like to see. When I say bullish, I'm talking about the stock market. I'm bullish on the S&P and the Nasdaq, but today has the potential. I will say this. I just want to get it out of the way. You also had UK inflation that came in cool. The RBNZ, which is the New Zealand central bank, they surprised rate cut. So you're seeing a lot of cooling in the world economy. I wouldn't be surprised if the year over year comes in at 3, or even a slight possibility of a 2.9 surprise. If it comes in at 3.1, then we've got to be careful, because at 3.1%, now inflation's not necessarily bottoming out. I'm sorry, it's not necessarily continuing to trend lower. Let's take a look at the inflation trend. So we have seen in the last few months the CPI year over year come down for the last few releases. We were at 3.5% in March. Came down to 3. Today, the market would not like to see 3.1, because 3.1% again would show we want to see, at this point, the market is ready to see. They're very much demanding to see, even for stock prices to be where they're at, for inflation to continue to come down. The market is expecting a 3% print. If you get a 2.9, the market's going to cheer. And if you get 3.1, the market's going to probably have a mini attack like it did on NFP day. So we'll see. How does CPI affect NAS and US 30? Massively, because it's all about the Fed. In today's trading world, it is all about the Fed. If you trade NASDAQ, US 30, if you trade gold, if you trade currency pairs, if you trade the dollar, guess what? We all trade the same thing. We all just watch the Fed if you're a fundamentalist. Some people don't, they're not as into fundamentals. That's fine. But you can't deny the Fed is the most powerful force in the short run for traders to focus on. In the long run, I would argue company earnings and just a stable, corporate earnings are the most important factor for stock traders. But for gold traders, for currency traders, central bank activity, which is based on the economies of the world, that is your bread and butter. What do you see on gold, Nick? Okay, I'll give you my take on gold. Here's my thoughts on gold. I think gold is... I'm not saying that there can't be a big drop on gold, because it could happen. But let me tell you this. My bias on gold right now is a bullish in no matter what scenario. Now, the price action might not be bullish no matter what. Don't hear me wrong. I'm not telling you, oh, it's certainly going to go up. That's not what I'm saying. If inflation goes up, if inflation goes up, if we have a 3.1% print, gold is going to probably snap lower in the short run, because people are going to rule out interest rates and people are going to sell gold because they want to see the dollar weaker. The dollar would strengthen on a hot CPI print, right? So in the short run, I would say gold would probably snap lower, but then you'd have concerns about the economy is slowing and inflation is high. Stagflation leads to gold going much higher because people freak out about the economy. They don't know where to put their money. Gold is, over the longer term is a good inflation hedge. Over the short run, it's a terrible inflation hedge, right? But so inflation hot, CPI hot, I think gold goes down. Then I buy the dip if I can find a setup. If CPI is cool, meaning lower than expected, I think gold just goes up. So I am bullish on gold in either scenario right now. But please understand the difference. I'm not saying that price action will only go up from here. I'm not saying that at all. I'm saying that if you get hot inflation this morning, CPI coming in higher than expected, 3.1%, it's unlikely, but it's possible. If it happens, gold, in my view, would probably move lower in the short run. And then my view would be looking for pullbacks to actually buy that dip. If CPI comes in cool, I think it's just, okay, we probably take out the highs for gold. Does that make sense? This is kind of high level fundamental stuff, I understand, for a lot of our newer viewers. There's 1,129 people watching between all of our different platforms we're streaming to. CPI is massive, but let me tell you, maybe this will resonate with one person out there. If you're somebody who just waltzed into this stream and you haven't actually done any research about why these fundamental forces matter, why is there more than ever viewers watching our streams when these new spikes occur? Is it because it's just fun gambling? You know, it's that meme like, let's go gambling. You know, is that what we're here to do? No, like if you actually are here, a student of the markets, if you're actually trying to learn how to trade, trying to manage your own money, and you are wondering why are these movements so important, or why are these spikes so aggressive? It's because they're so important to the market. Smart money managers, if you listen to them in interviews, let me bestow upon you some wisdom that I learned a long time ago from somebody who managed a lot of money. I asked him some questions about this. He said, why is it that when you listen to interviews with billionaire money managers, the greatest traders, why are they always, not all of them, but the vast majority of them, why are they talking about what the Fed's going to do? Why are they talking about the economy? Why are they talking about corporate earnings so much? Why aren't they talking about head and shoulders and trend lines like all the retail traders? Something started clicking for me. I realized, oh, it's because the real forces in the market are not pretty charts and lines and drawings. They're fundamentals. They're macro. They're the state of the economy. They're the business cycle. It's a lot of work, but then you realize it starts clicking. You're like, why aren't these trend lines moving, making me a bunch of money? Oh, it's because this stuff is hard and you actually have to learn it. Yeah. Anyways, guys, we got about 1 minute to go here. Don't go anywhere after the spike. We see a lot of people just come in for the spike and then they leave. Don't be one of them. I'm telling you, we got some good analysis coming after the spike gets going here. We got about 30 seconds to go. And we'll break this down here in just a second. Again, please don't trade. Please don't gamble on the spike. I'm telling you, I did that years and years and years ago. Learned my lesson hard. The spreads will get nasty. If you're over leveraged on it, you can lose your entire account. It's yeah. Don't be silly on these things. Breaking news, guys, coming in just a second. All right. Let's see what we get. CPI coming in. All right. CPI coming in here. Dollar index is slightly lower. Gold slightly higher. S&P flat, basically. Slightly lower here. NAS about flat. Let's have a look here. See what we got. You'll see the reaction before you even see the numbers on Forex Factory. 2.9. Okay. Look at that, guys. We got 2.9%. There you go. And in my view, here's what's going to throw everybody off today. Okay. Calling this right now. The stock market is not going to massively crash on this number. But even though this number is better than expected for the stock market story, my expectation is not a ton of upside. Why? That's great news for the stock market, Nick. Well, because PPI pulled a lot of that data forward, right? The excitement was out of the bag yesterday. So my best guess, and that's all you can do in markets, is that for those of you who are like me and you're staring at the stock market this morning, we got most of the move yesterday. PPI already told us most of this data. 2.9% is a beat. That's great news. But is that going to lead to a 5% update on the S&P 500? I don't think so. I think we are going to see, hopefully I'm wrong because I'm long, but I think we probably see, upside, but not massive upside because we pulled a lot of that excitement forward yesterday. And I got to say, I don't want to, there's no such thing as jinxing this. The market doesn't care what I say. Last time we had a cool CPI print, the market moved up and then dropped, right? So even though it was a good data point last time around, I believe that was, it was July at some point. I remember distinctly data come out. It was great news and the market dropped on it, right? Sometimes the market can get ahead of its skis. And so that's the question. Are we ahead of our skis? We've had several days in a row of upside, but a 2.9% inflation read, regardless of price action, this gets a check mark from me. I am still bullish, staying bullish. I think the Fed, I've said it many times, maybe I'm right, maybe I'm wrong, but I think the Fed can thread the needle. I think that they can achieve some semblance of a soft landing, meaning cutting interest rates, keeping growth going okay. And I've been waiting to play this sound, guys. I really have. I asked James to put this together, but this sound is so hyped to me. Check this out. This is like what the stock market did. Check this out. Ready? Stock market just said, nope, we're not going lower. And off the very high levels of fear that we saw, boom, fear gets super high. We reach extreme levels of fear in the market. And sure enough, that was a bottoming signal. Yes, that was some funk. PHONK, if you like that kind of music. I do like that kind of music. But anyways, the market kind of just ripped higher off of the idea that the economy is not crashing. And I like the case to be made that, look, the Fed has ammunition to cut interest rates and data is not crashing. So again, why isn't the market up a ton on CPI day? Why isn't it up a ton? It's 2.9. What the heck? It's because yesterday we got most of the move on PPI. Right? Most of the excitement on cooling inflation check mark that we just talked about is already in there. So yeah, I think you're going to see probably back and forth movement today, but I don't think, again, I mentioned it right on the release, like 2.9%, cool. But I think that's about how the market feels like. Cool. You just confirmed yesterday. The bigger thing was going into today, are you going to undo yesterday's excitement with some surprise? The CPI gurus blew up. Sadly, guys, I know we make those jokes and stuff, but man, I get like messages every major news event. There's people like, "Oh, Nick, I blew my account." And I'm telling you what, guys, if you're gambling on news events, stop it. Stop it. If you just made that mistake, if you're somebody with us right now and you just got whipped out of trades, tell yourself I'm never doing that ever again. Stop gambling on news events. I promise it's not worth it. You're going to lose money gambling on news events. You are going to. It's not a question because the spreads are horrible, right? You're battling. You're trying to cheat code the system. If you're somebody who's like, oh, I'm going to get fancy with it. I'm going to snap sell gold right before CPI. I'm going to get it right. You might hit it every once in a while like a lottery ticket, but you don't know what you're doing. If you don't have the respect in this market to actually understand what the data is that you're trading, just go to Vegas. Just go make a trip out of it. Go gamble there. It's more fun. I'm telling you, if you are serious about this stuff, you can't be messing around with trying to call the spike direction. It's like every time you guys see them, some of you guys who are my regular friends that hang out in here with me, you guys know what I'm talking about. You see the comments, people will be like, oh, sell gold 3 minutes to go. Like, what are you doing? You got to look at yourself in the mirror and be like, what the heck am I doing? Just trying to predict what the price of gold is going to do in the next 30 seconds. Are you kidding me? Nobody knows with certainty, right? It's all educated guesswork. So if you're putting a huge risk on a single trade, you've taken out the educated guess concept and you've said, I'm just gambling. Yesterday, we had a perfect candle.
Perfect candle. That green candle right there.
Perfect green candle yesterday. Beautiful. Today, we were at risk to nullify that idea with a surprise CPI. But if you're asking today, if you're asking why didn't the market make a big move, I want you to seriously pause for a second, because I've been there. And I want you to say to yourself, you say, self, do I actually get this stuff? Do I actually get what I'm trading my hard-earned money on? And if the answer is no, then you've been very honest. And that's been great, because that's how you make progress in trading. If you're like, okay, I don't really fully understand the fundamentals. We're here Monday through Friday. It is free to hang out in the stream. I share everything. I don't have a paywall for a course. We do offer stuff for sale, but I don't charge any money for education. I'm not here trying to educate personally. Like, that's not my goal. I'm here sharing my opinions as I trade the markets. If you learn something in my streams, that's awesome. None of this is financial advice. I'm not here to tell you I'm not here to do your homework. I'm not telling you what to invest, but I trade my money every day on the live stream. So again, totally free to come in here, hang out, and learn this stuff. So where we left off with that? Well, inflation data comes in cool for both the producer price index and the consumer price index. And you know what that tells me? That tells me that I'm feeling okay about my Russell position, which I'm currently long on. I've got a long position on IWM. Got a long position on SMH. How's SMH doing today? SMH up 0.34%. We'll take that. I trimmed my stop loss on this one yesterday. At the end of the day, Nick wins when we warn about gambling on news. Just don't do it, I'm telling you. 1,000 new traders just blew their account. Every single CPI, every single NFP, I'm telling you guys, I've been doing this since 2018. Every single time, it is a rotating wheel at it's like a casino in here. I'm telling you, I'm like the teller at the casino, because I see people come in, they blow their money. Oh, this is a scam. They quit, and then new people come in. If you don't want to be one of them, then you've got to put in the work part of this. And that's where people are like, oh, I don't actually want to work at this. I wanted to make money. I don't want to work at it. Join the club. And you know who's making money is the people that are working the hardest, people who have been in it for a long time, learned a lot of hard lessons, and got back up again. Thank you for your patience with this channel. There is some patience involved, but I also just love this stuff myself. This is my my interests. I love learning about, markets, economic stuff. Trading is it is very interesting to me, but trading itself is interesting to me, not big money swings, right? And that's where I think the difference is. If you're somebody who's like trying to get good at trading because you want to make money, I think that's just the wrong path. Like, the only people I know who make money in this stuff are people who they got into it and they stayed into it, not because of the money. Because let's face it, most of you guys who are newer to this stuff, you're not going to make money for a couple years. Like, if you're very diligent, work very hard at this stuff, you might start making a little bit of money a few years from now. That's the whole truth. And if you don't want to put in the work between now and then, it's probably not for you. But if you like this stuff, if you like studying price action, if you like studying fundamental analysis, the economies of the world, then maybe there's a path for you. And that's what I found, is like, I actually love this stuff. It's actually very interesting to me. Even if I was just trading a demo, I'd still be interested in this stuff. And in fact, maybe that's the ultimate test. Maybe if you're someone who's like, I really want to be into this stuff and learn this stuff, but I'm sick of losing money. If you can actually find interest in it, just trading a demo account, then you've cracked the code. But if you can't have any interest in this with a demo account and take it seriously, stop trading. That is the full truth. Don't trade if you can't find it interesting and take it seriously on a demo account. What year did you become profitable, Nick? About 2.5 years into my trading, I got to a point where I figured out how to be break even, where I just wasn't losing money. I was risking appropriately. And at year 3, I started making money. And the difference is people think making money means, oh, you are now just printing like the Fed. And that is not the case. Making money just means, oh, I'm making a couple percent per month. And I'm not blowing my account, having drawdowns, but getting through them. And guess what? That hasn't changed since then. It didn't suddenly get, now I'm making 15% per month and it is so easy. Nah. Couple percent per month, slow and steady, stack the chips over the years, and you do just fine. Compound interest is a powerful force if you can survive the drawdowns, the disciplined part, the psychology. How can I tell that I'm profitable? If you have, over time, a very steady looking equity chart, like 12 months plus. And really, you'll know when you're profitable. You know how you really know is when you've traded through different market environments. So I generally lean bullish on the markets, and I'm usually picking sectors that I like or specific indices that I like more than others. Like right now I have the S&P, I have SMH, which is semiconductors, and I've traded through different market environments. I've traded through 2020, which was a flash, crash environment where we're down 30%, chugging up trends, prolonged bear market downtrend. So I've traded my strategy through many different market environments. And I think you really earn your stripes when you've thoroughly back tested and then live traded through multiple market cycles in different environments. And that's why it takes time, because you might think you're a profitable trader when the market is doing a certain thing, but then when things change, are you still a profitable trader? Or at the very least, are you surviving that market changing environment? Anyways, guys, we've got a lot of stuff to talk about, so I want to keep pushing on. I want to talk about the put call ratio for just a moment on the EdgeFinder. Again, I mentioned this earlier, but we had peak fear last Monday. People got terrified, and everybody went from nobody wanted puts, right? Nobody wanted puts over here. Now, what are puts? Puts are bearish bets that you can place in the options market. Long story short, you're basically betting the market will go down, the stock market. And people buy puts for a number of reasons, but one of the most common ones is defense for your portfolio. If you're an investor and you feel the market is on the edge of a cliff and may crash, you may want to buy some puts to hedge your portfolio. Put demand essentially was very, very low in June and in July. Then in recent weeks, we saw puts became the latest fashion. Everybody wanted to buy puts to hedge their portfolios because on last Monday, everybody thought the market was going to crash. And that actually ended up being a wonderful opportunity to actually get long. I like to look at the put call ratio a lot. I've been tweaking this tool on the EdgeFinder a little bit, which is our market scanning software. By the way, if you'd like to get access to the EdgeFinder, we'll drop a link here in the chat for a 30-day trial if that's something you're interested in getting access to. There's so many different sentiment indicators in here, the top setups algorithm, so much more. Look at, whoa, guys. Hello, S&P 500, very bullish reading, giving us a +10. Holy. Trend flip to the upside. That makes sense. GDP beat, seasonality, retail sales, commitment of traders data looks good. Retail sales held it together. And the last one, we'll get latest data for that this week. Inflation stats are looking great. Heck yeah, I'm actually pumped about this. Love that. Because I'm currently long the S&P 500, so the EdgeFinder giving us an even better score today. Wrong sound, dang it. That's cool. I love that sound effect. I know it's so nerdy, I don't care. I just thought it sounded so cool, and I asked James to make that clip for me. Anyways, yeah, S&P and gold, euro, these things are getting nice bullish readings. NASDAQ's up there. Bitcoin is close to positive. We will absolutely take that. That's great news. By the way, again, 30 days access. If you want to apply for an EdgeFinder trial, click here and someone from my team will reach out to you with information on a trial. So yeah, we will see how that one goes, but love to see that S&P continues to push higher here. I trimmed my stop on this one, and I may actually start trailing it soon. I'll have to see. I'd like to see a higher low form on the S&P 500. Like if we get something like this, if we go back and retest, put in a higher low, then I could probably trail a stop. How much is the EdgeFinder? It changes because we have different discounts we're running sometimes. Right now, it's a nice little discount. If you'd like information about getting access to the EdgeFinder, we'll drop the link to our direct message center where you can speak directly to a member of our team and get that answered right away. For Naveed or anybody else who would like some information about the EdgeFinder, Chandler, if you don't mind dropping the link for us to the direct message center where you can chat directly with a member of our team. And also, while we're on that subject, if you are interested in getting access to the EdgeFinder, or you're interested in getting access to our VIP room, if you're serious about this stuff, you want to learn and you want to trade alongside myself, Frank, and Ivan, our traders here at A1, we're currently doing a 35% off sale. If that is something that you're interested in, you can currently get 35% off the Discord VIP group. And if you're interested in the EdgeFinder, just because I mentioned the discount for that, we'll extend that just for the live stream, 35% off the EdgeFinder if that is something you're interested in. If you'd like access to the EdgeFinder, we're not doing that like right now as an official sale, but just because we've discussed a lot of this. Yeah. Forex James, hey Nick, I'm on in 10 minutes. Can someone send me the link to join? Yes, James. Let me sorry about that. I'm sure the guys meant to send it over to you. Might have just missed it. Chandler, if you don't mind, maybe just sending that to Forex James for his upcoming show part. But again, guys, we just dropped a link there in the chat. Come join us in the Discord group, or if you'd like to get access to the EdgeFinder, again, we will honor that just for the live stream. 35% off offer for either the Discord or the EdgeFinder, just for this component of the stream. .25 or 0.5% cut possible now. Yeah, I mean, I think that the Fed could probably do either one in September. I think a baseline is probably 25 basis points. You know, you've had some decent growth still hanging in there in the economy, but it depends largely on retail sales. But 50 basis points also, again, looks increasingly possible with this inflation read this week. Inflation's just not a problem right now. The hindsight people would say, Nick, we could have told you that. Look at commodities. Commodities have been going down. Silver's going down. You know, gold's different, but the industrial commodities, look at copper, right? A lot of people would say, look at commodities, and that will tell you if we have an inflation problem, right? Inflation usually leads to commodity prices rising. So to see copper down, to see silver down, to see oil down, that would kind of tell you in some ways, maybe there's not an inflation issue right now. NASDAQ is modestly higher here at 0.16%. The Russell is trying here, man. I really want to see the Russell make a big move. I'd love to see it. Small cap, mid cap index would be awesome to see start to rally. To see the broadening of the rally would be awesome. Nick, just curious, biggest challenge juggling a full-on business while trading full-time. Trading is stressful in itself. Alan, you are absolutely right. I should probably go to therapy. Just kidding. But not a joke. I mean, therapy might be good. I think therapy is probably good for everybody. I've never done it, but I imagine it's probably awesome. Anyways, biggest challenge in running a business. Yeah, I mean, I have we have a 10-person team. I have a wife. I have trading that I manage, a YouTube channel. I stay really busy, but I don't have kids. Maybe that, honestly, something's probably going to have to give when I have kids, to be honest. But I'm 27. I got that grind in me. I love this stuff. So stressful as anything, yes, but fun. Have not seen your profit numbers in your broker? Well, you should have asked me on a red day. It would have been more fun. Here is my P&L today. 0.34%. We'll take that. I'm long semiconductors pretty heavily, which is a bit of a higher risk trade, but I'm in profit on this one. I'm probably looking to trail stops if we get any sort of higher low. This is the NVIDIA neighborhood, right? You're talking about NVIDIA, AMD, Qualcomm, talking about Broadcom, all of the chip manufacturing companies. I'm pretty bullish on that space with the recent pullback. I think that if you're going to see the market continue to trend higher, which is my thought, that you're probably going to see the leaders that have led us here take back that leadership role and continue the party. Right? So the idea of like NVIDIA was the big driver, AI, revolution, all that hype. I think that there's something there. A lot of people, the common, I would say that, people are like, oh, everybody's buying the hype. Well, a lot of the hype is to be bearish on that stuff, right? A lot of the Twitter, if you go browse around Twitter, everybody's like, oh, AI is just a bubble and it's going to pop and blow everybody's accounts. And I don't know. I feel like, AI has already been, it's so impressively fast at getting better. And the utility of AI is pretty strong. Here's a company that I think is pretty cool. Palantir Technologies. So if you're somebody who says, what's the utility of AI? This company, I would say, has a pretty good case. Palantir basically creates data. It's like a data mastermind company. It helps companies be more efficient with their data, protect their data, organize their data, and ultimately save a bunch of money. I was reading something about how I think it was Kellogg Company or some boomer boring company did something with Palantir and ended up saving them. I'm just talking random numbers because I can't remember what it said, but they saved a ton of money by paying for their expensive service. Palantir offers an expensive data mining, data AI sort of service to help companies better optimize their data, become more efficient. And it ended up saving the company massively more money than they spent on Palantir services. They also recently partnered up with Microsoft to do some crazy stuff for them. So you want to talk about AI being useful? Here's a company that could help other companies become more efficient with their data. Now, this is a highly speculative stock. It could go down by 50%, which I would probably buy a little bit of it. But my point is, I think AI has more use cases. It's kind of like the internet. Everybody gets a little bit overexcited in the short run, but in the long run, the internet changed everything. I think AI has the potential to be that too. In the short run, there will be overhyped stuff for sure, but I like the longer term story. And I think that we're at a different place than we were in the onset of the internet in the early 2000s, where companies were getting pumped up in the NASDAQ like crazy that didn't make any money. Well, now we have companies at the top of the NASDAQ that are monster companies. You're talking about Microsoft, Apple, Amazon, Google. These companies are massive behemoths. They make so much money. They make more money than they ever have. Those are our leaders in the stock market rally. So if you're asking me, is this all a bubble? Maybe they're richly valued companies, but they're not junk companies. The ones at the top are super quality companies. Can they still drop a lot? Yes. Valuations can change. How much they're valued at can come down if the Fed starts raising rates again, or, if we enter a recession, their valuations will change, but it doesn't change the fact that they are very quality businesses that make a ton of money. So there's my bull case. I'm bullish overall. I've been bullish. I bought this dip recently. I bought it too soon. I bought the NASDAQ too early again, too early again. And then I bought semiconductors right near the lows, and it's been a nice bounce trade. That's my semis trade, SMH, highly volatile ETF. And I put a piece of my account in this one. Put a piece of the account in SPY, SMH, and IWM, which is the Russell, which is finally making some semblance of a move today. Let's see if that can continue. My view on silver. Silver's just lost that momentum, man. I don't know what's going on with silver. So here's the thing with silver, momentum here has broken down a little bit in the short run. If we go back and retest like the 200-day moving average, I do like silver. I like the idea. I'm bullish on both gold and silver. I prefer gold lately as a potential hedge to, a stagflation scenario. I've talked about this setup for a little bit on gold. Like if we get a break and retest, I'm interested in this one. We have confirmation on the EdgeFinder front. Gold's getting a very bullish reading. I really like gold to the long side, as I do the S&P. I like the idea of keeping a little bit in both gold and S&P and stock denominated stuff in my own account. So that's kind of what I'm looking for. VIX continues down another 3% today. My goodness. VIX went from 65 to 17. This might be the fastest drop in the VIX in history. Dropped to 73% from the highs in a couple days. Probably not the fastest ever, but it could be up there, man. That is a crazy, crazy fast drop off in volatility. It really psyched out the market big time. Everybody got super, super scared, and then suddenly it just completely changed back, swapped back. It's been a tough couple months. I'm not, I bought the dip early, so I lost money on the way down. And then I kept buying it and finding entries to try again. And I am in some good positions now, but I'm definitely, don't get me wrong. I'm not trying to come across as I got it all right and it was all easy. But the big pop in the VIX, I felt pretty confident that was a little overdone, that people were getting too scared. And typically high levels of fear in the market can historically create some really good buying opportunities. So when that VIX popped up and the put call ratio jumped up big time, I got pretty long and pretty risk on, because I didn't see the economy as crashing. And I still don't. I don't see the economy as crashing right now. We've got some good indicators. Inflation's cooling. The Fed's got 5.5% of interest rates worth to cut. So I am more bullish now than I have been in recent years, which is weird because we've had a big run up. And maybe I'm wrong about all that, but again, my analysis tells me stay long. My strategy tells me look for dip buying opportunities. That's what I'm doing. But I want to also just last point about this before we move on to our next show guest. Even if I'm feeling very convicted about something, don't get me wrong. I'm not saying I feel very bullish and so forth. I'm going to risk everything on this and go all in. That's not what I'm saying. I feel very bullish, which means I'll take some very moderate risk on the long side. That's really where I'm at with it. Anyways, guys, we're going to now swap over and hear from our next guest. We got Forex James coming on to do a little segment. So we'll stay. We'll be right back in just a second. We're going to take a quick break, thank our sponsors, and while we take this break, I'm going to drop the links in the chat for Forex James, the social medias, YouTube, that sort of stuff, and also his website, elitetraders.io, where you can find out more about his services. So stick around. We'll be right back with Forex James just after this quick break. If you're someone in the United States looking for a Forex broker, it's been hard to find recently. There's been a lot of changes in the industry, so I wanted to take a moment to tell you guys about Oanda. Oanda is a US regulated brokerage that allows US traders to trade currency pairs like the euro dollar, the pound dollar, the dollar yen, Kiwi yen, all sorts of different currency pairs. So if you're interested in checking out Oanda, we're going to be dropping a link in the chat right now as we speak. They, again, are a huge brokerage in the United States that allows you to trade without the worry of whether whether or not your account is going to get shut down tomorrow from an offshore, unregulated, sketchy brokerage. They have been around for a long time, and I've used them myself for a number of years. So if you're looking to trade FX and you're in the US, this is the brokerage to check out in my personal opinion. So take a look at it. We'll drop the link in the chat, like I mentioned, should also be in the description of this live stream. Do your due diligence and see if it's right for you. Now back to the show.
Hey guys, how's everyone doing? Hope you're all having a good day. Hope you all didn't lose money during CPI. It's actually a very small reaction. I completely agree with Nick in terms of it was kind of, expected. We saw PMI come out yesterday, so it wasn't necessarily a huge shock. Having said that, the dollar is actually doing okay. So it is up on, let's see, not up on the day, actually, that was the wrong chart, but it's still respecting our overall trend to the upside. So in my view, I need to see where the dollar is going from here. I'm not looking to try and forecast this. It's more a case of just waiting, sitting on my hands. Obviously we do have well, more than likely, we have Fed cuts coming next month, which will potentially break this trend line if it doesn't happen sooner than that. So that's basically the main watch I have at the moment in terms of the dollar. Hi, James. Do you think gold will pull back before rate cut to break later? I'm not sure. Let's have a look at gold. Let's see. Just sort of camera out there. There we go. So yesterday I was talking about the 2500 level and saying this was a target of mine in the short term. And to be honest, I was expecting it to potentially get hit today with CPI, which clearly hasn't happened, not even close. So I am on the side of yes, I do think gold will pull back, but I'm not convicted on that. I'm not certain enough to place any trades. And the only reason I am thinking that we may pull back is if we look when we formed the previous all-time high, we saw a pullback. Again, formed all new all-time highs, we had a pullback. And it's happened the past 3 times we've come up to this level up here. We've had these pullbacks. Now, gold hasn't created a new all-time high. It's just missed. So that's a small factor. But we also need to account for profit taking. So in my view, what's happened is we've obviously created all-time highs here. We've pulled back a lot of profit taking here. Same situation here. People are buying at these lows at this sort of support level that we've got down here. And then they're cashing out back up this resistance. We've got a triple top here. So it wouldn't surprise me if we do see gold have a little dip, although to where, I don't know. Let's see the daily. So I suppose we are sort of trending to the upside slightly here. So I guess my target, if I was to short, would be somewhere around this box here. So around 2400. And that's just following the previous lows. Obviously, we are creating higher lows, but we're trapped at this resistance. So we'll see. But I am bullish on gold. If we look at all of the global factors, we've got elections, we've got the Middle East, we've even got Russia, Ukraine starting to get a little bit more interest now as well. So I think there's more reasons for gold to be bullish than bearish. Zen, I'm glad you found it helpful. You're the first person to say that, so I appreciate that. Emmett, hello James. Hello Emmett. Emiant, sorry. Can I do oil? Yes, actually, it's interesting you mentioned oil. I took a live trade on oil yesterday when I was on this stream. Where is it? Here. So I took this trade live, and I didn't say it at the time because I didn't want people to really copy this, but this was a hedge for some of the other trades I'm in. So you can see I'm in the dollar Mexican peso, and I'm in silver, both shorts. So this was more of just an inflation hedge, or just a hedge for those two positions in case, news came out as a shock. At least I was positioned in a way where I could minimize losses from either position. Although this one's moving, was moving quite nicely. We peaked at yeah, just over 1% profit on this one. Although, obviously, since news has come out, we have seen a bit of a move back, but I moved this position to risk-free just before CPI, so I don't really care what happens, to be honest, here. It's not a trade I'm expecting to take profit. I think that oil actually has some room to the upside in the long term, and the hourly trend is bullish as well. But yeah, at the time, the H4 looked really nice. You know, we just broken out of the 200 moving average. The RSI was overbought. We had a little consolidation followed by a bearish engulfing candle. So just for a short-term trade, and again, just to offset some potential losses from other positions, it made sense to just take a little go at this one. So I'm still in oil. However, in terms of placing a trade now, wouldn't be really looking to, because we've got the 4 hour that's bearish. We've just rejected this 200 moving average on the daily as well, which, if you don't know, or anyone that doesn't know, the moving averages are essentially dynamic support and resistance. So oftentimes on higher time frames, so the daily and the weekly, you'll see the 200 moving average get used as a level of support or resistance, which you can see here has been rejected quite nicely. And the current daily candle has rejected it as well. So just for now, I'd sit on my hands. I wouldn't be looking to open anything new on oil. But as I'm already in this position, I'm happy to let it run. I am GJ long from 188, and it's just ranging. What should one do in this situation? Let's have a look. Well, I'm very much a person that will place a trade and let it go. I don't really... Actually, let me just draw this up before I talk too much. Let's see. So you were at 188. Interesting. Okay. So I assume you just entered. So yeah, the way I see trades is if you place it for a reason. So let's say you've got, I don't know, 3 or 4 factors to back this trade up, whether it's technicals or economics, it doesn't matter. Whatever the reason is you place the trade, if they're still valid, there's no reason to then start playing around and micromanaging and closing out and having emotions, because nothing's changed. All that's changed is you executed on what you wanted to execute on, or what signaled you into the trade. So my point is, yeah, if you've taken this trade just now because you saw your edge come into play or whatever it was for some reason, and that's still there, why worry? Just let the trade run. In terms of my personal view on the yen, let me pull this up for you so you can see it. Where are we at here? So these are all the notes I've made yesterday and on Sunday. So we've got the USD JPY. Obviously, this is more tailored to the dollar yen, but it can be applied to the pound yen as well. The stabilizing as positional unwind nears completion. So if you look at, in fact, I don't know if the COT report's out yet. I think it might be Thursday that the retail traders get the COT data. However, it looks like 90% of the carry trade unwind is completed, although that's, you know, basically just based on the COT data. It's not something we can nail on the head, unfortunately. Cyclical hedges may sell into USD JPY rallies, but structural outflows from Japan likely to continue, maintaining a bearish view on the yen. The expectation for dollar yen to reach 155 by year end due to carry trades and structural Japanese outflows. But yeah, overall, I'm bearish on the yen, bullish on yen assets, yen pairs. Sorry. So I'm still long on my dollar yen position, and I'm still long on my Australian dollar yen position. Now the Australian dollar yen is actually recovering a lot better. Just we have seen some nice strength come into the Australian dollar compared to the US dollar, but yeah, I think if you are in yen long positions and you're feeling a little bit uncertain, that's completely understandable. The yen is a bit of a scary one to be in, especially if it's a dollar yen. But, you know, again, it's one of those things. If you took the trade for a reason, you need to trust yourself and you need to trust your analysis, especially if you've got the data to back up profitability. Hey James, hope you are doing well. Any views on dollar Swiss? For sure. So dollar Swiss, I am bearish actually. Let's see. So we did see, of course, we had a very intense market over the past week or so, which caused lots of safe havens to start rallying. So we had the yen and the Swiss doing their job. They gained significant strength. It was lots of mainly due to a lot of outflow from carry trades and into other opposite positions, essentially giving the Swiss and the yen some strength. So what I think is we will see this sort of correction that we've had, which is just a sort of natural pullback. You know, the RSI was oversold. It was too extended. Now, just because it's the dollar Swiss, I do stand more on a bearish side rather than a bullish stance. Now, again, I'm just going to pull this up. I don't want to bore you guys too much, but this has got all the information in for me to be able to provide you with some real value rather than just technicals. So the Swiss franc remains overbought with limited potential for further appreciation. The Swiss National Bank is likely to intervene to prevent significant Swiss strength. Short positions in Swiss are attractive if there is a bounce in risk sentiment. Safe havens and status trade recommendations. Swiss is identified as a safe haven currency with strong correlations to Japanese yen. Recommendations include potential mean reversion trades for Swiss. So I've just realized reading that I got mixed up. I was talking about the dollar CAD, not the dollar Swiss. So dollar Swiss actually is more of a long trade. So sorry about that. Yeah, ignore everything I previously said. I was thinking of dollar CAD, not dollar Swiss. So yeah, it would make sense if we do see a correction to the upside, obviously to sort of offset a lot of the selling pressure we did see during the risk off market. However, that will lead me into dollar CAD. So dollar CAD is where I'm bearish. So let's just see. So as I said earlier, I am looking for slightly higher oil prices towards the end of this year. Match that with the Fed cuts. I mean, we don't really know if it's going to be 25 or 50. They more than likely will cut. I'm not going to say that there's a possibility they won't, because I don't really think that is a possibility. I think it will be 25 basis point cut. And that's largely expected by the majority. So if we look here at the CME Fed Watch, we can see the 500 to 25 is a 56.5% expectation, 43.54, so a 50 basis point cut. So it's essentially a 100% expectation they will cut, and then over half majority that it'll be sort of a 25 basis point cut. So that leads me to be slightly more bearish on the dollar compared to the CAD. GJ flag pattern. I'll be honest, I don't even know how to draw a flag pattern. I don't really do patterns and things. I more just look at basic support and resistance and some moving averages. Silver. I am short silver. So this one's not looking too great actually at the moment. So essentially this one was a bit of an early trade. Ideally we should have waited, really, in hindsight, for this level to get hit. So if you know how I trade using the fib levels. So we are currently in between the 618 and the 0.5 level, which are sort of the main levels I use. And we are seeing a little bit of a slowdown towards here, the previous low. So I am looking for this to be used as sort of a break and retest, although that's not looking too likely at the moment. Oops, didn't mean to do that. But yeah, I think silver does have some room to go to the downside. It's just, can we get this move now, or will we see a bit of a deeper pull or a higher pullback? And then a move to the downside? I'm not sure. We have also just bounced off the 200 moving average on the daily. Like I was saying, it can be used as dynamic support and resistance, and this is a really good example. But yeah, overall I'm bearish on silver, but we'll have to see how it goes from here. Since we have unexpected rate cuts on New Zealand, what's your view on the Australian dollar New Zealand? Let's see. I was saying this the other day. Actually, I don't really trade New Zealand, so I'm not sure on what the news actually was. Let's see. Hold on. So we need it this week. Okay, so it's here. So it's 5.25. Yeah, okay, so that makes sense. So that would lead to a weaker New Zealand, obviously, which I guess is what we've seen here. So overall, I'd be looking for a long position, although I don't know where. So the weekly is above the 200. The daily's just bounced off the 200. So I'd be looking for an entry on the H4. So I guess there's two levels throughout here. We can target, let me just make this a bit more clear. That's a bit ugly. I'll do that. So we could target the previous high and look for, well, actually, I guess it's just happened. We've just tapped into this. So it could be a break and retest. But because this was a news-driven move, I am more inclined to look for a correction and then a continuation. So I'd be more looking towards a pullback, maybe even just 50% of this move. Let's see. So around here, let me do this with a stop just below, a target potentially at the previous highs up here. So this is how I would approach it. Although just keep in mind, I don't trade this pair really. So what I say, take with a grain of salt. Obviously, do your own research. Just based off technicals, this is, yeah, probably the way I'd go about it. Get ready to buy gold after New York Open. Fair enough. UJ pullback, potentially, yeah. Thing is with the yen, it's more, I wouldn't be trading the yen if you were looking for quick intraday trades. I'd be, well, I am positioned more for the long term. So as you saw earlier in the document I showed, I'm looking towards the 155 level by the end of the year. So that would offset my two initial entries up here and actually be in profit if we could reach 155, which would be nice because I do obviously have an entry down here. So yeah, it was something to keep in mind. But I think what we could expect with dollar yen particularly is possibly further downwards momentum as we come into rate cuts, and then a slow and gradual move to the upside and then reach 155. And then from there, don't know, don't care. I'm out of the trade. Thank God. That's half joking. Of course, I'll still pay attention to what's going on, but as long as I'm out of the trade, that's good because I've been sat in it for way too long. Suffered some serious drawdown on yen. UK unemployment changed to positive 145 yesterday. Expected 14. Is the economy about to fall off a cliff? Ben, I've been saying this for the longest time that I am a super bear on the pound. I hate it. I hate the country. I hate the government, and I hate the position that the sort of regular working people are in because it's a mess over here. So my outlook on the pound is still short-term bullish, but long-term bearish. So I'm looking to get into short positions by late this year or early 2025. Now, the timing of that will vary, so take that with a pinch of salt. However, my target for the pound dollar is 135 or 1.35. And that's by the sort of end of this year. Hopefully, actually, pretty soon. And then I can get out before we have rate cuts, but I don't think that's going to happen. So I was looking to get into the pound dollar today. Actually, here we go. So I was looking to get in on a 50% retracement of yesterday's candle. We did almost see it here, although I wasn't paying attention. I think this was during CPI or something. I don't place trades during news. But yeah, this was kind of what I was looking for. I mentioned this on yesterday's stream as well. So I am looking to get into the pound dollar at some point, but not desperate to get in because, like I said, I don't like the currency. I don't think it has that much potential. Thoughts on euro pound. Euro pound is interesting because I was looking to go short on euro pound, mainly based from short-term strength within the pound and a bit of a weaker euro, but that's not really happened. We also had this really nice rejection off the previous resistance here, along with 200 moving average. The issue is I've not seen any compelling data to really execute this trade. It seems like the selling pressure is really over with euro pound. The daily is actually bullish now. Weekly is kind of bullish, half and half. We're still underneath 200, but the fast EMAs are switching. The hourly is bullish and the H4 is bullish. So it's not really something I'm looking to trade now. The trade has kind of been scrapped. Pound Australian. Ben, lol, yeah, the country is finished, man, looking to leave. Yeah, Ben, I actually put on Twitter the other day, I'm looking to move to Asia. Potentially just Bali, maybe even South Korea. I don't really know yet. But yeah, I'm looking to leave potentially start of next year. Pound Australian. So let's see. So actually what we can do is have a look here. So the pound's recovering nicely. The Australian dollar's recovering nicely. So in terms of strength, they're actually both doing quite well. So looking technically, the daily's still above the 200, which is a nice sign for the bullish trend. Seeing some small consolidation here on the daily, but we are at this previous resistance, which looks to me a bit like a break and retest, if we can see that. In order to see this, we would need to see a weaker Australian dollar, which I'm not too sure we'll get, to be quite honest. So it's one to watch out for. It may be a shorter term trade on something like the hourly or the H4, and potentially something along these lines here, just back up to the previous highs. So that's my view, but yeah, it's not something I'd take, I don't think. Let's see if this lines up. Not really. Yeah, I'd avoid that one. What are the best plays from seasonality viewpoint? EuroCAD. I'm not going to show you that one. If you have access to a seasonality program or software, go and check EuroCAD, the start of August to sort of mid-September. Also, take a look at oil. Oil falls off a cliff towards the end of this year. Gold's melting. Let's take a look at gold. I see a lot of talk about gold at the minute. Yeah, gold is actually not doing too hot, which is interesting. So yeah, I think, as I said before, I think this is potentially just some profit taking before we see a ride further up. I think if we are looking for new all-time highs, I would suggest, well, I probably shouldn't be saying suggest, but I would be looking towards the 2,500 level, as I said earlier. So if we can get a pullback to sort of 2,400, then I'd be interested in going for a buy position. But if we don't get there, then not really too interested. The big red flag for me is this 200 moving average. I've mentioned this multiple times before, but I'll mention it again. We are very, very deviated from the 200. So if we look, last time we reached these all-time highs, where was this? Sort of 2000 roughly. We were 27.75% above the 200. We are currently 21.95% above the 200. So it's not a case of we might drop right now, but I do think at some point we need to have a mean reversion. And a mean reversion is essentially just a pullback, although it's a deep pullback. It's not something to be taken lightly. You can be chopped up in them. But if you research mean reversions, there's full strategies that revolve around mean reversions. So often what you'll get with more, often algorithmic traders will have a trend following algo, and then they'll have a mean reversion algo, and that protects them essentially from this type of situation. So they can buy all the way up following trends, and then when their mean reversion trigger is clicked, they can start shorting into the reversion. Anyway, that's a bit of a tangent, so we'll get back on track. Thoughts on Ethereum? I don't really trade crypto. I can have a look at the chart in a minute, though. What rate cut are you talking about when it comes to pound? They already cut, or do you mean something else when you talk about G? Yeah, when I was talking about cuts, I meant the dollar and the Fed cuts, not the pound. So we can have a look at ETH, and then we'll move on to some other things, I think. Let me just check the time we've got here. Okay. Yeah, okay, got some time. Ethereum. So my analysis was way off here. I can't remember when I drew that. The weekly looks really good. So if we look on the weekly time frame, we just touched this 200. This is actually a really good example of a mean reversion. So we obviously were very deviated. We've come back, now bounced off the 200. So, you know, I say this every time I look at crypto. I don't really know much about it. Although, as far as I'm aware, crypto is more of just a buy and hold thing, especially the main things like Ethereum, Bitcoin, or whatever else there is. So just because we bounced off the 200 on the weekly, that's giving me a bit of a sign that we could be heading to the upside. I would be looking for something along these lines. I mean, this is very rudimentary. So I wouldn't be taking any trades based off what I say here, but that's just the way I see it. Australian yen. Yeah, I'm already in Australian yen. I think this one will recover fine. I don't think there's really many issues here. If we look at the yen, I think we are going to see a bit of a correction. Now, whether it'll be to pre-intervention levels down here, I don't know. But I do think we'll see some further move to the downside on the yen. I think the Australian dollar still has room to the upside, at least this previous high up here. So yeah, I think Australian dollar yen will be okay in the long run. But yeah, I think it will be a slow process. I don't think it's not going to be a rocket to the upside. It'll be more of a, you know, painful chop, and then eventually we'll start correcting. NOK/SEK. Emmy, why have you said NOK/SEK? That's interesting. I'd like to know why you're asking for that one. Australian yen is bullish. Expect retracement. Yeah, exactly, Jake. Gold is dropping. DXY impulse upcoming. As I said before, news waves regardless of print. Let's see. Yeah, fair enough. I mean, sure. When you say waves, do you mean Elliott waves or what? I don't really hear the term waves. Still in my NAS long. I think I showed this one yesterday. Yeah, still sat in this one. Again, move stop to break even before news, just in case. But it's moving fine. I think it's about 0.5. Oh, actually coming up on 1% profit, which is nice. EuroCAD. So this is the EuroCAD position I was mentioning earlier. So I've still got my initial entry here. I scaled in at, I don't think it could have been a worse entry, to be perfectly honest. But it's just one of those things. I'm still bearish on this asset, so, or this pair. So happy to sit through that. But yeah, NOK/SEK, I'll cover that one. So the reason I was asking why Emmy was talking about NOK/SEK is because I've been talking about this quite a lot. I put it in my Telegram and I put it on Twitter. So what I'll do, rather than trying to just redo everything, I'll pull it up here for you 1 second. So this is the tweet I put out. I basically just gave you all the thesis for free. So bank preview and NOK outlook. Norges Bank is expected to hold rates with a hawkish tilt due to NOK-driven upside risk to inflation. The first rate cut anticipated in December. NOK weakness appears overdone, with a bullish outlook leading to Norges Bank meeting. Recommendation to buy NOK/SEK to benefit from the relative stance of Norges Bank compared to Riksbank, central bank flows, likely lighter positioning, and geopolitical factors. NOK/SEK fair value and market positioning. NOK/SEK fair value has increased from 0.98 to 0.99 due to a rise in oil prices, indicating the pair is undervalued. NOK remains oversold according to G10 FX Pix 2.0 model. So this is from the Credit Agricole Bank report. Market dynamics and trade recommendations. NOK remains oversold while the SEK has seen new selling interest. So that's I'll leave it there. But yeah, essentially, I think the NOK/SEK has a lot of potential to move to the upside. Now, when this will happen, I don't know. May have already missed it. We've seen quite a lot of buying come into this market recently, but I'm looking a bit more long term. So we can see we've got a really nice, I think this is a descending triangle is what they're called. I'll do it on a daily. So we've formed a really strong support where we've tapped into 3 times and rejected aggressively each time. I just don't really like where price is right now. So I want to see a bit more of a pullback and then an entry. So what I'd really be looking for is something like this. So very typical move to the upside. So we have a little pullback, and I don't really have a reason for this pullback. Just I want to see that. And then, of course, the break of trend line, the retest, and a continuation. And then potentially either scale in or execute on this retest, depending on if I'm in already or not. So there you go. That's the NOK/SEK breakdown. For anyone that was in the stream yesterday, you may still have the link for the Notion economics thing that I've been showing. Any Middle East is boiling. Fair enough. Middle East is boiling. Rashid, what's going on in terms of what we're doing? Some market breakdowns, and I just showed a trade thesis for the NOK/SEK. Do you use 50 and 200 moving average? Yes, I use the 50, the 200, the 21, and the 8. James, for now, don't you think the dollar might be slightly stronger since the US economy is a bit stronger compared to other major other major economies in politics can favor the dollar? Yeah, and I've been quite vocal about that as well. I think you've got a great point. So yes, the dollar might see selling pressure as we go into rate cuts. However, when we see selling pressure and talk about weakness, we always need to put it in comparison to something. It's all good and well saying that the dollar is selling off or the dollar's weak or the dollar's strong. It might, in compared to what? If we compared, we could say the dollar's weak, but then if you compare it to something like the Turkish lira, it's not weak at all. Whereas if you compare it to something like the euro or the pound, it might be very weak. So you always need to put it into comparison with what you're talking about. So I think with regards to your point about, is it in comparison to other economics or other economies? I think yes, which is one of the reasons I'm looking to go long on the pound dollar for now. Jay, yeah, we can take a look at DAX, absolutely. Here we go. So I was looking to buy DAX actually, but unfortunately I just missed it. So what I wanted to see was a pullback to the 200 moving average on the weekly, which we didn't get. But then on the daily, we broke the 200 moving average. So really there wasn't an entry point. I like to see bounces off moving averages. And I know that a lot of people say, oh, that sounds very retail. That's very, rookie or newbie or whatever, but it works. It works very well, especially on higher time frames. So I think I've been saying this about a lot of things recently, but we saw obviously a risk-off market. We saw a lot of outflow from the markets. Now, I don't think that was justified. I think that what you've got to realize is traders are very sensitive. So although traders are very, mindset, psychology, blah, 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 they're very scared very easily. So if one thing comes out a bit negative, they'll start panicking. And I think that's essentially what happened here. People were panicking. It was a wild goose chase or a sheep mentality, for example. So, you know, people start selling, that induces more sellers and more sellers and more sellers, and that's basically what led to this. Now, I think that's over. I think this reaction was very impulsive. I don't think it was justified. And I think we will start seeing the stock markets recover, or mainly the indices start to recover. I saw an article, actually, I think it might have been on investing.com. I can't remember exactly where, but they were also saying that a lot of banks were buying the dips, so specifically on DAX. So something to keep in mind. Follow the trends. I'm fine, thank you very much. How are you? Hope you're having a good day. See what crude's doing. So I'm making a video breakdown about crude. So I'm waiting to close this position actually, so I can finish the video. But it's just not really showing much momentum. Although we aren't sustaining upside movements, which is good for this position. I would like to see actually a slightly lower price, and then possibly a higher low form. So maybe something like this, where we form a higher low and then continue up. And then if we start seeing something like this, so maybe even 50% move back, oh, it's almost perfect, something along these lines. If we see a bullish engulfing or some consolidation or something here to some sort of reaction, I may take a long position off here and cut the loss, cut the profit on the short position. Or the second option is to execute long and leave the shorts as a hedge. And that way, if the long position doesn't work out, we've still got the short position to cover the loss and profit. That's something I very rarely do, but it's definitely one way of doing it if you are in a situation like this. Maybe more of a target around here, something along these lines. Thanks for insights. No problem. That's what I'm here for. Can you break down New Zealand Swiss on the daily in H4? Yes, I can. No problem. So H4 and daily. Well, both are bearish. The problem is I don't really like the New Zealand dollar. Now, I don't really trade it, but I just don't really think it's a very good currency. It's not, you know, they're in a double dip recession. So it's not something I'm looking to really buy, whereas the Swiss might be a bit more of an option here. Daily and weekly are in downtrends. The H4 is in a downtrend. The only concern I have is before we start heading to the downside, are we going to see a correction to amend the move we saw with the risk off market and then potentially head lower? I'm not sure, but you know, if we look at the daily, you wouldn't really want to start trying to long this or buy this. It's an overall downtrend. So to me, you know, it's one of the things I would only really look to sell this because the prevailing trend is bearish. So let me see. Yeah, technically I don't like it, but overall I have a bias of the short side. I'm just a bit cautious of a potential correction. If I want to sell cash secured put on Amazon, what price do you think is good? Jeff, I am really sorry, but you're asking the wrong person. Puts, calls, options, stocks, it's not my field whatsoever. We do have Chris on at 10, 10 my EST, I think. So I think he's probably more the man to ask that question to. Dollar Swiss, we've done the dollar Swiss. Let me just see. Actually, I'm not sure if this will work. Just give me 1 second. Yeah, okay. Never mind. Yeah, okay, cool. So let's have a look at the FTSE then. So I've been looking to short the FTSE for quite a while, just because of my bearish stance on the pound. So it's typical, actually. I was on the wrong side. There we go. I was on the wrong side of the risk off move. So I was buying essentially all of the downside we had, which in the long run might work out quite well. But the typical thing is I was looking to short the FTSE after this candle here, and I just didn't execute on it. And I, at the time, looking back, I can't remember why I didn't, but there was a reason that I didn't at the time. But it could have been a nice trade. But yeah, overall, looking to short. We've just bounced off the 200, which is a nice sign. We could go higher. But yeah, I think this is, again, more into the end of the year or the start of next year. I'll be starting to open sort of a DCA approach, shorting the FTSE. So in terms of shorter term timeframes, I'd be looking to go long. And the reason is because I very rarely or almost never short the indices. Just because naturally their drift is to the upside. So if you're only buying indices, you are essentially always trading the trend. Now, of course, that depends on what time frame you're on and things, but generally speaking, it's a lot easier to buy than sell. Now, of course, that's a general rule I have. If I'm looking to short for a specific reason, like I'm bearish on the UK, then obviously that rule changes slightly. But let's see. I don't think we'd get a 50% pullback, just because we have the moving averages supporting quite well. So I wouldn't really look to go long right now. I'd be targeting the previous highs at around 8,455. Stop loss. Now, the stop loss is obviously very dependent on the entry, and we don't really have an entry. Ideally, we'd have a stop loss a bit lower, though, around this consolidation around here. But yeah, there's not really much I can tell you on the FTSE in terms of technicals. If Bank of England and Bank of Canada and ECB cut again in September, what do you think will happen to DXY? Well, it won't really impact the DXY directly. It will obviously then impact things like euro pound, pound dollar, and all of the pairs. They won't. If the ECB cuts, it will not really have much effect on the DXY itself. Please help with silver outlook, your bias long-term, short-term. I am selling silver at the moment. Feel free to rewind. I've already covered silver. I got into longs on US 30 at, let's see. So you were long at 39,353. Okay, so essentially where we already were. I quite like this position, actually. I wouldn't mind it. So, to be honest, stop loss, you only really have two options, either a really wide one down here or quite a tight one here. If this was me, I would have a stop loss just here. I don't really see a reason to have much of a larger one on this one. But yeah, I think you've caught quite a nice trade here. I quite like this, actually. I'm bullish on the indices. Most of the time I am bullish on indices, but I'm long NAS here. So yeah, I think a long on US 30 also makes sense. Prince, we've already covered NAS as well, but just to give you a quick breakdown, I am long on the NAS because I see a recovery in the indices. As I was saying earlier, I just think that there was a lot of panic selling. I think it was very impulsive, and I think a correction at least is due. To where, I don't know. Maybe we won't reach back up to the previous high. That might be a bit optimistic in the short term. But yeah, for now, I remain bullish. James, great minds think alike, because we've got the same name. So let's see what's going on. Yen pair's still not really doing too much. The Nikkei, still a bit upset that I missed this trade. It looked, the setup was perfect, really. Bounced off the 200, bounced off support. So, this would have been a really, really good trade to catch. The only problem is to get something like this, you would have had to buy into a very, very bearish weekly candle, which of course is very risky to do. So would have been a very high risk entry, but it would have been great. Is gold still selling? Yeah, gold stabilized a little bit. So it's not broken. It's not broken these lows, which is interesting yet anyway. If we can get a close below these previous lows, it may be a day trade opportunity to potentially get short. Don't want to be too greedy because, there's no reason to. So potentially just short into the 200 moving average at this previous level of resistance through here. But yeah, I'm not too keen on doing this, but it's one approach for anyone that is sort of a short-term trader. Jake, you need a raise. Good job. Thanks, Jake. I appreciate that. I'll tell the A1 guys to give me a raise. Yeah. No, I don't get paid to be on here. I am on here because I think Trader Nick's built an amazing community. I think what he does is great, and you guys are always great to talk to. There's always some interesting questions and fun people to talk to. So it's a win-win for everyone, really. Oil, yeah. I think, to be honest, guys, I've covered almost everything that I have to cover. So if there's any questions, let me know. I think I've got just over 10 minutes left. So I'm still, this is the dollar Mexican peso. This wasn't my trade, actually. I'll be honest. This was one of my traders that works for Elite Traders. He sent this one. The entry was a bit rough, to be honest. But overall, the trade looks great. The economics support this one quite well. Now, I won't go into that because it's not my trade. I don't want to do that to him. Silver seems to be still hanging around the fib level, which is nice. So something to keep in mind. But yeah, that's about it. I'm on Quartex and I'm just getting losses. What's Quartex? Is that a broker or a market? I've never heard of Quartex. Maybe I'm being stupid. I don't know. You can handle any market on Quartex. I've never heard of it. I don't know. I don't know if it's a broker or broker. Okay. Yeah. Well, I can't say anything about that. I mean, if you're getting losses, it's likely not the broker's fault, to be perfectly honest. Brokers don't see, and this is going off a little side note, but brokers can't see your entries or exits, take profits or anything until you've closed the trade. So yeah, if you're getting losses, probably down to the analysis that you're conducting rather than the broker. But yeah, I think on the Nikkei, it would be very interesting if we can get above this level here. What I don't want to see is this used as resistance. Now, that wouldn't be good really for me because I want to see a recovery, not a pullback into lower prices. So ideally, we do see a pull back up into this level of support. And I may look to take a long position from here with a really tight stop. And that would then potentially allow the moving averages to cross into a bullish trend again. So that's something I'm watching. But yeah, I think the yen, the Nikkei, I think there's some potential there. Can you show NASDAQ again? Oh, I can show the charts, but I can't repeat myself for a third time. I'm sorry. Market maker brokers can't see orders. Ben, no, brokers cannot see order. Well, sorry, they can see your orders. They can see the assets, but they can't see your stop levels and entry levels, take profit levels. As well, entry levels can vary. I'm not sure on that one 100%, but stop losses, they definitely can't. B book brokers, so brokers that trade against you, which are 99% of the time offshore. Unregulated brokers probably can, because obviously they don't have to stick to regulations and rules like the ones that the SEC and the FCA regulate. But generally speaking, brokers aren't against you, but they're not with you. They're just a middleman. So yeah, I wouldn't really focus too much on your broker doing anything unless it is an unregulated broker. USD BRL. I don't think I've ever looked at the Brazilian markets. This looks a bit hectic already. What's going on here? To be honest, actually, I mean, this looks like a bit of a no-brainer to buy. Nice level of support through here. 200 moving average isn't too far off. So maybe if we could see, and just to clarify, this is all based off technicals. I don't know the economics behind the Brazil enough to really give a breakdown on it. But I wouldn't be too mad about, about potentially going for a long position here off this level of support, let the 200 moving average catch up, stop below support, something along these lines would kind of make sense. We could potentially fill the gap here. In fact, there's quite a few gaps that could get filled, which are quite a nice sign to go long here as well. So yeah, maybe I'll keep an eye on this one, do some research. Oops, wrong flag. There we go. Pound Swiss. Emmy, I can't. I'm sorry, I can't disclose why we're selling silver. So I say this sometimes where I can't tell you the reason behind some trades. The reason that I say that is because the trader that works for Elite Traders is an investment manager. He's not a retail trader like me and you, or so that generally speaking. So a lot of his trades are sent to clients and large investors. So basically, there's an NDA in place. I can't go and publicly give out his trades. So unfortunately, that's kind of the payoff I have for having a trader of his level. So it's a bit unfortunate, but yeah, I mean, obviously we give them in the Discord because that's private, but publicly, I'm really sorry, I can't do that. So pound Swiss, let's see. So yeah, I don't want to fib there. Essentially the same situation here. I do see the pound as having some more steam left in it. Just because I'm bearish long term, it doesn't mean I can't be bullish short term. I think, whoops. It wouldn't be out of the question to potentially get back to this high at least, and then potentially higher. So the issue is where's my text gone here? Oh, it's white. Yeah, I don't want just a one-to-one here. So this is the daily. Let's have a look on the H4. The hourly's just switched to bullish here, which is a nice sign. The H4 is still bearish. So with that in mind, I think I would need to see break, retest, continuation. And then long position off the retest up to the high, stop loss below this level of support. So it'd be more something like this, I think would be the approach. So yeah, we'll see about that one. Great insight, thanks. Good crew here in Bali, my guy. Hit me up if you're here. Yeah, for sure. I think I'll probably go to Bali later this year and have a look at some. I've never been to Bali, so I don't want to move there without visiting. So I'll be in Bali later this year, I think, just having a look around and some properties and things. Loving the market breakdowns. Thank you. Oh, getting a lot of love today, guys. I appreciate that. Thank you very much. Makes me smile. So NZD cat, I think it's probably the last one. I'm off in 4 minutes, so I'll cover this one and then my time's done. I think I'm on tomorrow, as far as I remember. So again, New Zealand, not too happy with. I think similar situation with the dollar CAD. Actually, I would like to see a lower price here. So I think because we're in double dip recession, I mean, it's not new news. You know, New Zealand's not been great for a long time, but it's still holding up. But it's still not a currency I'd like to be going into buy positions with at the moment anyway. I think the Canadian dollar has some potential coming up with maybe higher oil prices later this year. So yeah, New Zealand CAD to the downside doesn't look bad to me. We've actually just rejected this 50% pullback as well. So this would have been a really nice trade if I was paying attention. Something like this would have been great. We are still, yeah, price is still underneath the 200 moving average on the daily time frame, which is a good sign for continuation of the downtrend. Hourly's consolidating a little bit, so not the best. So I wouldn't be selling right now. Just because the hourly's consolidating, I would like to see a slight push to the upside one last time, and then maybe execute into some short positions here. So yeah, I'll keep an eye on that one. But that's a technical approach. I've got 3 minutes left, so let me just have a look here for you and see here. So we've got Kiwi. There's actually not much here about the New Zealand Canadian dollar. So bullish on CAD relative to USD, but favoring AUD over CAD based on valuations and rate differentials. Bank of Canada Fed divergence and USD CAD expectations. The narrative of Bank of Canada Fed divergence is nearing its end. USD CAD strength is expected if the Fed implements 25 basis point rate cut in September instead of a larger non-standard cut. Anticipated weakening of USD CAD as the Fed starts its easing cycle into 2025. Through this will be moderated by a weaker global growth backdrop. CAD positioning and trade recommendations. Now, just to clarify, these aren't my recommendations. All this information is aggregated from bank reports. Leveraged funds have increased short CAD positions by 19,821 contracts, the largest on record. CAD is expected to remain range-bound in the short term, but has potential for rally in 2025. New trade recommendations include taking short positions on New Zealand dollar CAD. So there you go. Now, again, just one last time, it's not me recommending these trades, and it's not A1 or it's not Trader Nick. That's just copied and pasted from bank reports that I've read. So now that disclaimer's out of the way, the short position is backed up there. So yeah, I think that's it. My time is up, so I'm glad we got most of the things out of the way. Chris is up next, so I'm sure you guys will have some questions for him, or he can take over some of the questions. As for DAX, we've already covered DAX. Feel free to rewind. But yeah, I think that's about it from me. So guys, thank you very much for watching. As always, I appreciate you all. And yeah, I think I'm back on tomorrow, so I'll see you then. So yeah, enjoy the rest of your days. See you very, very soon.
If you're someone watching the show right now and you're outside of the US looking for a better brokerage, listen up. I wanted to take a moment to mention today's live stream supporter, Vantage. Vantage allows traders outside of the United States to trade CFDs. You can trade everything from commodities like gold, you can trade US indices or global indices, and you can even trade FX all under one brokerage, and you can connect to MetaTrader 4 and trade directly on tradingview.com. Not to mention, they also have a really good sign-up bonus going on right now. So we'll drop the link to that down below in the chat as well as in the description of this live stream. Check out Vantage. Now back to the show.
Hey everybody, happy Wednesday. Welcome back to the session. We just had some CPI news drop this morning and trying to make some sense of what the market's liking about it, not liking about it. I did notice that the Fed watch tool has flipped once again to now the higher probability is the Fed cutting only 25 basis points. I think a factor that had to do with the CPI news that came out today. This print probably has maybe the echoes of stagflation. So that would be, slower growth and sticky inflation, right? I was looking at the Fed websites and seeing that the St. Louis Fed, Atlanta Fed had forecasted for, Q2 or the year over year to be showing around 2.7, 2.74, and it didn't print there. I was actually kind of surprised. I thought that was intentionally high to have a better print. We had solid PPI yesterday. The market ripped all day yesterday, very steady. But anyway, printed 2.9. It's better than before, but at the same time, look at your previous month over month core and month over month CPI, negative 0.1 to 0.1, and they printed 0.2, 0.2 as expected. So, month over month was slightly higher and year over year was slightly lower, but same print. So we're right back at the same window of sticky inflation, right? So if we go into the EdgeFinder for a moment, take a look at your inflation data year over year. We just can't budge this 3%. We can't really kick this 3%. It's been lower, right? I mean, this print right here, it's been lower. So since a year ago, we've essentially had inflation the same in the US. So what does it take to get inflation to drop? You hope that it's not times have to get tougher. We have to have more of a threat of a recession. Things have to be really slowing down. You hope that's not the case. But that's where we're at. So I was not super impressed with the print. I think price today is fairly indecisive. I'm trying to get a couple bucks out of a SPX trade this morning, which right now I'm pretty close to hitting my profit target at 290. So I'll be watching this for this morning to close up. I just took a trade this morning that I'm happy to share. I did the SPY trade. So let me bring over, oh, this chart is so ugly now. Just bear with me. So I looked at some of my gamma levels for this week. This trade is going to go out a little bit further, but I went and did a trade. If you can see my writing here, so I did an 8:30 expiration. I bought a 5:35 put, so that's a long. So +1 at 5:35 put, and then a +1 at 5:50 call. And against that, I did a -1 at 560. And up here, I did a -1 at 525. So right now we're trading at 541. I'm giving price until the end of the month. We have Jackson Hole. We have retail sales tomorrow. What else do we have tomorrow? We have retail sales and unemployment claims, right? Yes. So that might be enough. Oops. That might be enough to maybe shake the markets loose with a little volatility, but we've already moved $13 on the week. The average trading range for the week is around $13 to $14 on the SPY. So that's why I'm taking this trade out further and looking at the next couple of weeks. So I already did a trade this week where I'm going out to September, looking to see if price gets to like 555, gets down to 515. We'll see what happens over the next few weeks, or the next 4 weeks actually. But in this trade, I'm just using what I have in the near term. This gamma level stands out, and this gamma level plus the gap yesterday starts to stand out. So if the bears are interested in filling anything, gap fill is great. If the bulls are interested in this melt up continuing, then we just continue to melt up. But these are the two levels that I'm watching. So I'm going to construct the trade based on that. So the reality is I took the trade. It cost me about $4.75. I put in a limit credit around 950. So I'm going to try to double my money with a 100% gain. There should be enough in there where if I get just the options themselves, okay, I've got to be close to hitting that profit target. Come on. Let's go back to the SPY right here. So August 30th, this trade. So there's my long call. There's my long call, my short call. So that's my debit spread. And there's my long put and short put debit spread. So right now we're trading around $6 at the money. So realistically, even if price is going to gravitate, so this goes out, 16 days. If price is going to gravitate towards my put side, I should at least see $2 to $3 of credit. Where this is trading for $4, it's probably going to trade for like $6 or $7. That's still fine. Like I'd be happy to take profit there. Mechanically on option trades, I typically look at a 15% target, 25% target. Those are high probability winners. If I'm going after something bigger, it's because we're getting a bigger move. Again, maybe tomorrow's a big, crazy directional day. Maybe it's not. Jackson Hole is next week, but we do have retail sales unemployment tomorrow, which I think the market's more sensitive about since we saw everything kind of dump on Monday last week. Okay, so let's talk charts. Let me try to clean this nonsense up a little bit. Just see the trees, through the forest. Okay, so I don't think there's really any big reason to be bearish until we have price rolling into the right side of this trend line. Okay, so I get it in here. It's like, technically I'd love to see this level call a top in the interim. I could see the bulls maybe testing this high and then fading back down. So we have two trend lines, and I'm just going to paint here in a thick black line. So two trend lines that we'd be watching. This trend line for the upside. If the bulls can keep price holding on to that trend line support, that's fine. If the bears keep price trending here, that's fine. Now, one thing I actually talked about this morning in my trading room is there is this little secret to indecision. Okay, if we have a swing from high to low, which we just did, all right, so this would be our high, this would be our low. If we see the market pull back 70%, it's not a Fibonacci number, it's a Gann retrace number. But I've seen over my career that a 70% pullback, that's pretty good. Drew that pretty much spot on. A 70% pullback right in here, okay? A lot of times that means that there's no structural damage to the upside, there's no structural damage to the downside, but what we have instead is we have a pullback of 70% and then another push lower, and then this swing becomes 70%. So you go from 70% high to low to a 70% low to high, and then back again, right? And all this is doing is creating more of an indecision look like that. I could see this. I could see August doing this for the rest of the month. The market put in this big high shakeout, and then we had a rip, we had a recovery, but now the market possibly slows down. Possibly. Now, we're not at 70% yet, not even close, but I'm kind of looking to see where does price pull back. Right now, we're sitting around 50%. If we fade at 50% right here, okay, this is 55%, here's 50%. If we start to get back below this level and look for a gap fill, then perhaps the bears are a little bit more serious. I read some interesting stats. I mean, look, I'm sure you all saw it. How many of you bought on Monday last week? How many of you bought your favorite stocks, your favorite indexes? If you did, excellent choice. I like the idea of some short-term profits, to be honest, because the numbers were pretty staggering. Nvidia has dropped 35% from the highs, and it's already ripped close to 30% off those lows. Now, keep in mind, if you drop 35% to the downside, you have to have like a 50+% recovery to get all of it back. So Nvidia has to rally 50% to get back to all-time highs. Bitcoin, we dropped down below 50K. We ripped up towards 60 and change. That was a 25% rip almost. Met up 18, Nikkei 16, Tesla 14, Apple 13, Amazon 12, Netflix 10, NASDAQ 9, maybe 10 today, Microsoft 7, S&P 6 and change, then Google 6. So we had some pretty aggressive short-term rallies that I don't know if they're going to be full on and permanent, but at least off the initial drop in the market kind of stabilizing that Monday morning, it's been a pretty good run the last week plus. Okay, let me check my SPX and see if it's in profit. It's trading right around $3. My trade this morning, 340. Trying to get 290 out of this thing. Come on. Give me another 10, 15 cents. Okay. So I'm going to go top down. So anyone have requests, gold, silver, Bitcoin, futures market, I'll do SPY, SPX, ES, okay, NDX, QQQ, NQ, Dow, Russell. I've got a penny ratio spread on the Dow that I put on yesterday. Still watching the Russell closely. I got some pin prices, 2050 and 2100. Watching those levels carefully. We've actually had a pretty crazy rip down on the VIX. This is ridiculously impressive to see the VIX drop as aggressively as it did, which honestly, all of you should be thanking the VIX because this could have been way worse, way, way, way worse. We could have had, the first close up here at 50. This is a 4-hour close, but a close here at 50, a rip up to 60 plus, and then immediately we're opening here at 38 for that trading day on Sunday, Monday, which was like I don't know if you appreciate how wild and crazy this is. It was the second largest move ever in this volatility instrument, and the market was only down. I mean, when this happened, this is what led to, okay, the S&P dipped about 10%. The last time we saw readings this high, the market was down 25%, 35%, 50%, right? 2-3 times in history. 2000 dot-com bubble, 2008, COVID, and now. So you're looking at 3 to 4 times, 3 to 5 times over 35 years, 34 years that this instrument's been higher, and this index was barely lower. Yes, the Nasdaq was down almost 20%. The SPY was down, or the S&P was down nearly 10%. But it's like that seems like a very high reading. So here we are, just completely retreated. Right, this dropped all the way back into now historical averages. We've retreated about 74%. So the trade that I did like, and I'm happy that I got into, and it's still not done. I put in some naked puts on the SPXY, and I'm going to see if I can hang on to this. I'm willing to take some ownership of SPXY. And my break even would be around, I've got a naked put at 35, a naked put at 55 or 54. My break even would be around $49, and I'll lower the cost basis there. Let's talk dollar. I'm just going to go down the list here. Everyone talking requests and asks. Nice video. Thanks, Daniel. Appreciate that, man. Yeah, I post videos quite a bit on my YouTube channel. I'm posting quite a bit here through the TradingView community as well, and I'm pushing that out on Twitter and YouTube. So if you follow me out there on YouTube or follow me on Twitter, you'll get those videos and notifications. So appreciate that. All right, a dollar index. Had a good discussion this morning on dollar index. I would say just be careful because look, it's August. We still have some data that's coming out this week to kind of wrap up the month, right? Or I'm sorry, wrap up the week. I just don't think this dollar is ready to make that full-on breakout. So if everyone's looking at the dollar index right now compared to the euro dollar, pretty interesting developments. I think, and this is just my thought, if the dollar bounces right here, if the dollar bounces right at the same low that we had last week, I would look at that dollar as a short-term opportunity to get long with a tight stop and see if this wants to just come back in, find this pocket, maybe find this 104 level that keeps getting hit all year. For the last 3, 4, 5 months, 104 has been this, kind of inflection point for the dollar. So, like I said, in the short term, if we look at something, I wouldn't just buy the low. I don't like that trade. But if I was watching something shorter term, let me go down to, let's say, let's go to this chart here. Let's go to the DXY. Okay. So let's say something a little bit more aggressive, but if we show signs of support right here and we start to confirm off those lows, if I get price getting back above my moving averages, then I might take a buy trade on the dollar index, put a stop loss below the U-turn. Target 1 would be back to this equal high here, and target 2 would be filling this pocket right here. So in the short term, look at this as far as reward to risk. If I get a nice little upturn, get some confirmation, stop loss about there, target 1 about there, and target 2 about there. So we do have a bonus. We can make more money on the upside than we would on our risk, right? So we'd have about a 1.5 or 2 to 1, or maybe even a 3 to 1 for this trade if we hold these lows. So I'm not calling the bottom here on the dollar. I'm looking to see if we will hold this level, start to get something bullish, take a trade, stop loss below, and then off we go. Now, if this trade is wrong, if I get stopped out here, I may reverse positions. And so let's say I take a mini lot at a dollar pip roughly, okay? And then I reverse this and go like a 0.15 or a 0.20, and I look to see if the dollar, in fact, does break lower than 102, and we're heading down towards a bigger number like 101 or 100, which would be a really nice trend on the dollar. The dollar, for the most part, has been trendless all year. It's been ups and downs and fake outs, and it sucks. Like to me, it's my least favorite basket. So I've taken very little trades on the dollar this year because it's been so tricky, right? But I'm just watching, because if we stay in this wedge, which I have drawn here, look at my higher lows, look at my lower highs, possible crown. That's not it. I don't think that's it. I mean, I can measure it that way, but to me, this is more, if we're going down, high, low, lower high, lower low. That's my symmetry. If we're going down, this dollar's going to break. I'd love to see a full-on breakdown of the dollar. You know, breaking below 100 for the first time since, 2022, I guess. Coming back into levels we haven't seen since 2020, 2021. So if we're going to make a move on the dollar, I'd love to see it. And I still think this, if we're going to see a higher stock market this year, we're going to have to see a weaker dollar. I don't think that there's any way that this dollar stays sideways and this stock market rips to all-time highs. I think if we're going to see all-time highs again or get close to them, that this dollar has to get weaker. Now, I talked about this morning as well. How many of you, let's play a little game. How many of you can tell me what the central bank rates are right now? Because we just had a rate cut last night from New Zealand. Okay. So how about this? Here's the quiz. All right. The quiz is this. Tell me yes or no if the central bank has cut rates this year. All right. I'm going to go in alphabetical order. So the Aussie is the RBA. Did they cut rates this year? Yes or no? Come on. Don't everybody speak at once. Okay. Did the RBA cut rates this year? So I'm putting the currency and the central bank. Pound is the BOE. The JPY is the BOJ. NZD is the RBNZ. And the US is the Fed. Okay. So the Aussie, the RBA, has not touched rates this year. They have not cut rates this year. Nope. So the RBA is still sitting at 4.35%. So they have not cut rates yet. Okay. Bank of Canada for the Canadian dollar. Bank of Canada has cut rates. In fact, they've cut rates twice. And right now, their bank rate is sitting around 4.5%. They were up to 5%. They cut twice. Now they're at 4.5. Okay. So they had a cut back in July, and I think they had a cut back in April or May as well. So we have, I'm just going to mark this. So if the bank is cut, I'm going to put this with a little red line. So the RBA has not cut rates. The BOC has cut rates. Okay. The Swiss National Bank has cut rates. Also, they cut rates twice. So they went from 1.75 to 1.5, now to 1.25. They cut rates. The ECB, they cut rates from 4.5 down to 4.25. They cut rates. The Bank of England cut rates from 5.25 to 5. They cut rates. The BOJ, tricky one. This is why we had the whole carry trade unravel. They raised rates from negative 0.1 to 0.1 to now 0.25. The RBNZ, they just cut rates last night. Okay. Of all the major central banks right here, the RBA hasn't done anything yet, and the Fed hasn't done anything yet. So I'm going to put yellow here. The Fed has not touched rates yet, but what they have said has gotten all these other central banks to act. This is what is so crazy about the Fed. What they say, other central banks take it and run with it. Fed's going to cut rates. Other banks cut rates. Fed's going to raise rates. Other banks raise rates. And a lot of times other banks do it before the Fed. The Fed gets so much free mileage out of talking. So we have the RBA holding steady at 4.35. The Fed for right now holding steady at 5.5. The Fed is going to cut rates more than likely, like high probability we're cutting rates in September, but it keeps going back and forth between 25 basis points or 50 basis points. Last week, Monday, the market was planning in 75 basis points, like this crazy emergency cut. I'm happy that's not happening. Okay. And I'm saying that because this is just the same Fed we've been hearing about over and over again. So I just want you to realize, like, there is monetary policy divergence happening right now. Okay. This is, in a way, one of the only tools that a central bank has, because the rest, you have fiscal spending, whether it's, throwing money at the problem like we tend to do in the US, or you have very little fiscal spending like you have in China. Okay. But I just think this is interesting that the Fed for the whole year has been the most important central bank. What are they going to do? Are they going to cut rates? And as soon as it was sniffed out that the Fed's going to cut rates, all these other central banks started to cut. Okay. Because they too, like inflation's been coming down. They don't want to finance at the rates they're at. So they've been cutting rates. The Fed doesn't want to finance where they're at. So they want to cut rates. But hopefully the Fed is cutting rates for the right reasons. We're cutting for inflation purposes and improvements, as opposed to cutting because we have to, we need to, we're now behind the curve. But that's still like it's an inflection point. I don't know. I'm not super optimistic over the next 12 to 16 months that this U.S. market's going to be at all-time highs. I think that we would be. I don't know. I think that around these current levels, we're probably putting in some tops that will last a while in the market. Just my thoughts. Okay, the RBA, that's the Reserve Bank of Australia. Okay. All right. So anyway, central bank stuff, it matters, but it's been interesting to see how there's been policy divergence this year in the central bank world. Okay, oil. Oil is up around 12% off these lows. I should have some income rolling in on CL this week. Let me check that here. Go to, all right, positions. Perfect. Perfect. Filled. Nice. 290. So that was a win. Yay. And it's 1022. Okay. Okay, one sec. Just have to type a message. And sell put at 5390. There we go. All right. Back to the sesh. Okay, so oil. We had a nice rip off these lows at 72. I have a credit spread that should be expiring this week. Here is put everybody's this one account's fine. So this one is out into the future. This one is near term. Yep. So 72.50 by 72. Right now, I've got about a 99.5% chance this stays in profit for my full credit there on 160 bucks times 8. Not too shabby. And then a 65 by 55. Also in some profit right now. This one's out to November. I'm just hanging on to it. This one should be able to generate, hopefully, this trade 65 by 55 for 61 cents. I'm putting in times 100. That's not right. I should be making like $300 of profit on this one. Let me see. So my naked put is showing that crazy profit target, but what I'm expecting here for 61 cents is in the futures contract should be worth about 300 bucks. All right. So anyway, this week will be good for CL. Oil is steady. We obviously have some noise going on in the Middle East, but I mean, support down here, resistance up here. You know, oil's not ripping to crazy highs. It's pretty stable. It's a combination of tensions in the Middle East and supply and demand, and there's your oil price. It's a little bit messy. Okay. CL, there's your futures contract that I'm in. Natural gas. I like natural gas, but I don't know. I'm being really picky here. I'd rather see natural gas get down to these lows and then trade it longer term. This might be a higher low, but we produce natural gas at such a high clip. I'm just going to hang on to, maybe we come back and revisit 170, 165. Right now, nat gas is probably running hot because it's being used a lot for AC. We had crazy heat throughout the U.S. And I think that, having ACs running 24/7 is probably led to a little bit of an uptick in natural gas. But I don't know. I'm going to wait for this one to maybe revisit lows or look a little bit better structure-wise. Gold. All right. Let's zoom in on gold for a second. Now, I'm more of a buyer, holder, dollar cost average into gold as opposed to spot trading. But if you're looking at XAG, if you trade CFDs out there with gold, I do think a pretty low risk trade would be if you look to sell gold here, stop loss just above these highs, and just try to get back down to the same lows. That'd be target 1 and target 2. That's it. Like it would be a very tight stop loss, and even a range there probably offers a 2-to-1, and a range down here offers maybe a 4-to-1. So there's good profit potential on gold. If you're willing to take a little bit of a trade, and if I'm wrong on that trade, if gold all of a sudden is like resistance, 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 and we're just pushing, I'm just not convinced yet. But if we're pushing, I suppose, like up this way, and we just kind of wedge and wedge and wedge and wedge. I mean, this is an ascending wedge that, yes, if we break gold to the upside, then absolutely I want to be adding to my longs. But just in case, right here, if we break this structure, stop loss just above, and then see if we just range back down. To me, this looks a little toppy. That's all I'm saying. So for those out there that are trading shorter term gold, I wouldn't mind seeing this. I mean, we're starting to break this little cluster we've had here for the last couple of days. And yeah, I mean, if it was a short-term break, stop above the highs, go after the same lows, that is a pretty good scalp opportunity in the near term. And if it doesn't work, I like the idea of a break, a retest, and then actually getting long and staying long and expecting to move higher, take a stop loss, and then just cancel, replace, and just trail that thing. Okay. All right. So that's gold. Silver, I still like silver. I have a lot of futures positions on in silver. I own SLV. I'm trading, quite a few things in silver. It's still one of my favorite kind of metal plays right now. I like silver more so than gold because number one, it's cheaper. Number two, the symmetry in the measure move is right there towards 35. I'm looking at a percentage move of around 29%, which I like. I would not like to see silver, which still could happen. But I could see silver. I don't know. I mean, I hope that we're going to hold here at 26, and all this is a little correction, and we kind of stabilize in here. I'd like to see silver get back into this area, back above $30, and then we start making that next push into 35. This is my profit target. Okay, I own SLV, and taking this back to $35 is my first target. I have a covered call at 35 that if it gets threatened, I'll probably start to roll it up if I can get more credit for it. But anyway, I'm positioned on silver for a couple things, SLV as well as SI, and just trying to stay out of the way. Okay. So my trade we're trading at 27.66. If I go to SI, which is the silver futures feed right here, we're trading at 27.70. And I have a 26.25 bull put spread, 26.25 bull put spread, 26 bull put spread. So as long as we stay above 26.25, which is right here, if we stay above this level, then that's out to the end of the month. That's out to near the end of September. We'll see if metals and futures markets stay pretty steady. Bitcoin. So smaller time frame. One thing that you have to remember here, like Bitcoin's not going to 74 without having an uptrending market. We probably have to see the NASDAQ heading higher, the SPY heading higher in order for Bitcoin to go up towards 74, which would break all-time highs. We're just sideways right now, which we had a nice rip. We tapped below that 50,000 mark. We ripped all the way up here towards 64. There's a little bull flag, which I kind of like. And if it stays there, then sure, a little breakout, stop loss below, and see if we can get to all-time highs. So I'm still bullish on Bitcoin. But since we're still hesitating at these highs, let me clone that line right there. So off these highs, just a little bit of a channel to be mindful of. So we have lows, 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 lows. I said this area was a bit of a bear trap, which it seems to be. And then on the upside, it's like, okay, so we go up here, we pause. Do we come back to the same high again? Maybe, right? And there seems to be a lot of volatility, but if we come back up to like 67, 68, are we going to actually fail there, or are we going to actually break and be in some new territory? I hate saying this, but it's like, I bought at 55. I did not buy at 50, right? I have a bunch of other crap going on in the portfolio that, me throwing into Bitcoin was didn't happen. I didn't do it. Plus it was over the weekend, I think. But I would still be willing to say, you know what, at 68 or 72, I'll probably throw in another, buy on Bitcoin until we maybe crack that 100K mark. But it's got to prove it. It's got to prove it. There's no way that, I could say like, well, Chris, if you're going to buy it at 72, why not just buy it now for 59? Well, because what if at 59 we come back to 50, right? I'd rather buy it down here. What if we came all the way back to this level? What if we actually enter into a downturn in the markets and all of a sudden Bitcoin is going with it, and we have a high to low that's a 75% pullback, which can also
Hey,
happen.
Chris.
Frank,
What's up? How's everything going? Did that credit spread expire?
Yeah, that was yesterday. I was 50 points clear of that. So by the skin of my teeth, grabbed about $1.90 yesterday between my little daily strangle and that bear call spread in the NDX.
Yeah, 50 points is not very big when you're talking about
it's
NDX.
definitely not. But so I had that chart running yesterday. If I go to the NDX, just look at this thing, by the way. If you look at this feed yesterday, so yesterday, we had a gap higher, right? We had, everyone's all excited about PPI. So this is NDX. So we gap up and we just melt up all day. Now on my chart at 19,000, I had one massive gamma level. And so I had told you this in Discord, like I was just going to put the sell trade and sell the call at 19,000. And I would have gotten more credit for it. I would have probably gotten like $2.50 or $3 for it, which could have been like break even or better, because if I collected, actually, you know what? That may not be true at all, because if I did a 19,000 by, let's say 1910, I think that's what I did. Yeah, I think it was a 1910. So that's a $10 spread, and I collected, let's say I was going to collect $3. Well, if this thing finished yesterday at 1906, what would I have lost? I would have lost the $3 that I collected and been down another $3. So I would have lost $300 yesterday had I done the 19,000. So I pushed it out further, and I just thought, how to make $100? Can I make $100? So I did the 1960. So 19060 by 19070, collected $1.30, and it didn't threaten my positions. Cash settled, so it worked out okay. But it was close. I'm not gonna lie, dude. It was close, and it drifted up there all day. So
yeah,
whatever. It still worked. I'll take it. Move on.
Well,
all right.
What are you thinking about in terms of inflation numbers coming in? CPI year over year was lower, but taking a look at core came in as expected. Month over month came in as expected, and both were expected to be higher than last month. So what was your take on this, I guess, result?
Yeah, I think my take is I think we're in the sticky camp again, right? You go back to July last year, we're in the same camp. 2.9 is not an impressive trend past anything we've had over the last year. Like, granted, we're not spiking up, but I don't see this as a reason for the market to get overly excited. The first thing I checked when I saw the newsprint this morning is I looked at the Fed Watch tool, and I saw that this jumped back to now the camp of, okay, Fed's likely going to cut, but it's no longer looking like a 50 basis points cut. Now the Fed's going to cut only by 25 basis points, let the data trickle in month to month. And again, this is subject to change. This could change after Jackson Hole. I have no idea. Does the market take a turn for the worse? I don't know. But for right now, if things just stay somewhat calm, then yeah, I think the Fed just cuts by 25 basis points and we move on month to month. And it's going to be agonizingly frustrating for traders that are like wanting a big rip or wanting a big fall or whatever they're positioned for. But something tells me, Frank, that we might just be going sideways for a second, and might just take some time to settle in. So I did take a couple of trades. So since we talked on Monday, I'd put a couple of trades in on, I've got a couple SPY trades in. So I did one today that is a 535. Where's my chart at here? Let me go back to the SPY. So we're having a nice little sell-off on the SPY. I'm targeting this 535. So this is what I did. I did a 535 long put. I did this out at the end of the month, by the way. So I'm giving myself a little bit of time. I went out of the money, so it wasn't super expensive. I did a 535 long put. and against that I sold a 525 short put. Okay, so it's a
Okay.
debit spread, but it's
Gotcha.
allowing me to hopefully capture some. I mean, if we move towards that 535 handle, my strike will probably be trading for like $6 or $7. I only paid $4.50 for it, so it covers both sides of the move, because the other side I did a 550 long call by 565 short call. That's also a debit spread. So I went out of the money on each one. I'm just going to look to see if price actually wants to go somewhere. This week, we've already moved about $13, $13 or $14. That's the average trading range for the week. I don't see us necessarily going too much higher, too much lower. I could see us going lower and filling a gap, but I don't see us necessarily stretching too much higher for the week. I think it's, kind of absent of a couple of news events. I mean, yesterday was a big directional day. CPI is having I would say, not an impressive reaction. I mean, there's certainly some price action that's suggesting this thing's trying to go a little bit lower. I look at this right here, like all this support just broke in the last 5 minutes. So either go ahead. Sorry.
If you take a look at the 4-hour chart on the NAS,
Okay.
So we had this. What I was afraid of was this breakout of this longer term trend line. So we break out of this pattern, and what I was afraid of seeing was a false breakout, and we come back down, test the lows again.
Yep.
But here's the problem we run into with this CPI report is that, so year over year did come in lower, but the problem is everything else stayed elevated. PPI was lower, but overall I'd say mixed results. So we're still kind of in that sticky camp.
Yep.
So it really does come down to labor as well. Like, people are talking about it's more labor dependent, but I think now more than ever, if we're going to have stubborn inflation levels, NFP, wage growth, and unemployment rate are all going to have to show some improvement. Otherwise, this CPI really does matter. Inflation really does matter. I don't think we should shift focus to one or the other, but I'm very I guess confident in the fact that both go hand in hand, and we're running into this sort of stagflation issue.
Yep.
Just depending on the last most recent data we've seen from jobs, the most recent data we've seen from inflation, this is raising that question again. And we've successfully broken out of this trend line, which is, I guess, a good sign for the bulls. But every time we tend to make a higher high, if you're looking at the way this market has been traded intraday, it comes back and forms lower lows. So here, I think I'm with you. I would say that if you wanted to take a trade, you would sell options, but on the upside. So if you wanted to do what you did like yesterday,
Broken wing butterflies.
Broken wing butterfly.
Yeah.
So
Right
collect
there,
premium
right there. Yep.
on an upside cap, but
Yep.
I think this also has to be pretty short term, because yesterday you got very close.
I know it was a 0 DT. I mean, look, I gave it plenty of room. Like, when I took the trade, it was trading like 18.7, 18.6. It was already up 2.5% for the day, and I'm like, I could have cut it really close and taken the 19,000 handle off that gamma level and taken in $3 of credit, which at first would have been like, sweet, I'm gonna make $300 today. But it threatened that position, and that gamma level did get hit, which is, from my experience and using that software, I go a little bit higher. I was willing to sacrifice what looked good at $300 for the day to, I'll take $130, and I was out of the way, because we needed to have a 3+% day. And I'm not saying that can't happen. It has happened. We had, 2.5%, 3% rips over the last couple of weeks since recovery. But take a look. So you mentioned the 4-hour time frame on the NAS. I mean, we came right back to the 200 EMA. I mean, the one thing that did happen is, I know this isn't your typical like daily and weekly, but we did cross into a sell zone on the 4-hour time frame. And if you look at this candle, I mean, this candle right there from that big sell-off we had on Thursday of this was FOMC, and then this is Thursday's just complete like backpedaling of that price action. So Thursday last week, like, this to me is where the big sell pocket is right now, in my opinion. And we're right to it. So I still have a bear trap on the NQ. As long as we stay, this is by maybe the end of the month. I'll double check the expiration. But if the NQ is below 19.1, I've got a $5,000 profit trap on the futures contract. So I mean, I obviously hope it does that, because otherwise that's a wash of a trade. But I like the broken wings up here. I was actually going to look at maybe doing an out of the money. If I just do an out of the money put, like if I buy a put, let me see what it's going to cost me. Like NQ, if we get to like 18.1, let me see what this would cost. If I did an out of the money, let's go NQ. NQ, let's look at something here for a trade. If I went to, I mean, realistically, if we start to tumble from Jackson Hole into September effect historically is a bad month for stocks. So, I mean, I probably want to go out to like the 30th. 18.1, I mean, that's a pretty expensive trade, right? This would be, I mean, this is going to cost me 10 grand to take the trade. So, I mean, if I lose on the trade, I'm going to lose 4 grand. That's not great. Let me go. It's 221 times 50. 221 times 50. Yeah, I mean, that's not great. So, I mean, if I do, I'm not taking this trade, but I'm just going to look at the numbers. Yeah, I mean, I'm not going to take that trade as is. I would consider, you know, an 18.1 by 18,000. I mean, that takes it down where it's like I can make, that's 100 points wide, dude. I mean, if I paid 1750, this isn't too bad. I mean, I could pay 875 for a trade that would pay me if I get 100 points. Okay, so 100 points minus the 1750. So I get 8250 times 50. I mean, I can make 4 grand on a trade that only cost me about $800 to take the trade, right? Yeah, so I mean, a trade that's less than 1% risk for a trade that pays about 2% profit, like that's not a bad trade. But again, I've got to get it right with the timing, and this is the downside about selling the 18,000. Like I'm basically telling the trade this: you have to be below 18,000 by the end of September, because if we're not, let's say that we do this. Let's say that I'm right directionally, and this thing comes all the way down here to retest the low. Well, because I have that sell side of the trade, if this thing dips back up, I'm still going to lose on the trade, and I got the direction right. So, I mean, it's just, I'd love to say that's the trade that I want to take. But if I put the sell side into it and I try to save the cost, I don't know. I mean, maybe it just has to sit there and I just need to eat it and say, look, it's a hedge, right? It's a hedge. So maybe that's not a bad play. But if I did a trade, I don't know, man. I mean, what else do we have in September? So tomorrow, by the way,
when is that meeting in September?
The September meeting is the 18th for the Fed.
Okay.
Yeah.
So that means, I mean, you were talking about a sideways market.
Yep.
Do you think that we're going to be kind of more the same? Like we're going to be having these, I don't know, 2% up days and 1% down days? Or do you think we're going to move before we get to that decision, before the Fed is likely to cut? Because that could be, I don't know, that if you're looking towards the end of September, that means you only have a few days after their decision for your thing to make a move. But
this is the first thing that I think about when you said, what do you think's going to happen? If you watch Squid Games, did you see that red light, green light in like whatever episode it was? That's what I feel like the market's doing right now. The market is like wanting to go, not sure what to do. It's like, what data can we go on? Is it good news or bad news? I mean, like we said this last week, after the dump that we just saw, I don't think that the market is going to move anywhere on its own. I think the market's like tomorrow, for example, what do we have? We have unemployment claims and we have retail sales. That is still enough out there because I think the inflation stuff, right? The inflation stuff is like, okay, it's not bad, but it's not getting better. But the Fed's still going to cut rates. So it's not like the Fed's going to raise rates all of a sudden. It's like, I don't think the Fed's going to say, we're not doing anything in September. If the Fed doesn't cut rates in September, the market's going to hate it, right? So if the Fed doesn't cut rates, the market's going to dump, I think. If the Fed cuts rates by 25 basis points, the market's probably not super excited about that either. And then the Fed will continue to be like very data dependent. The one thing the Fed probably is still very focused on, now that employment is becoming more and more sensitive, they want to see an improvement in the labor market, but they're still trying to keep inflation low and tamed. And in a way, I mean, we've seen the language out of Jerome Powell change a little bit, where when he said we don't need to see inflation down to 2% in order to cut. When he said that essentially allowed the Fed to be like, okay, we're seeing this 3% inflation print over and over again, and we're still going to cut. We can still be less restrictive, which is fine. But now tomorrow we have retail sales, okay, which I think for the U.S. will matter. So retail sales means strength of the consumer. Are we still buying? Are we still consuming? That's 70% of our GDP. Unemployment claims at 236. That's higher than the previous print. If we look at these numbers, you know, we've been pretty steady in here in the 200s, right? And so I know it's not non-farm, which gives you average earnings and unemployment rate and a jobs number. But this was also the big reason that last Thursday, the market actually got excited, because all of a sudden it was like a lower than expected unemployment claims. So I just think there's a lot of sensitivity, man. What's that?
It was an overreaction.
I think so too. It was more like it just was buy the low, you know, accept the discount as it was, and probably just cover your butt on some of those like nasty drawdowns that people were in. I mean, if you think about it, how many stocks look at like any, I mean, just take Mag 7 for a second. If you take any stock in Apple, okay, what did Apple do? Just from this trade from high to low. So we go from 237 down to 195. I'm just going to put a quick fib on this. I would venture to say that almost every Mag 7 stock from last week has recovered over 50% from that fall. And so I think that's why it didn't matter what the news was last week. It was going to be a buy to kind of find equilibrium. So there's your high, there's your low. We're right around that 61%. Now, that doesn't mean anything for a trade. I'm just saying we pulled back at least halfway. So anybody that's been stuck, or anybody that added to this, like they you know, shorts were covered, their collars were covered, like all sorts of option trades. I'm sure just equilibrium was a good thing versus just a straight up dump. Amazon, not quite. We're close, but not quite. Amazon, this one has had a pretty nasty spill. Amazon's around the 38% pullback. So I think Amazon, I mean, I still like Amazon long term, but we're at 38%, not 50. But that one had an extra dump because the market crushed Amazon during earnings. Google, I take that back. I guess I'm wrong. Google has not pulled back 50%, which means I still think there's more downside. Look at Google today. We're red on the day. We haven't even come close to pulling back halfway. So, all right.
Meta's at the highs, I'm sure.
Meta's near the highs. Yep. Google's there. Meta's near the highs. Yep. So that was no problem recovery wise. Microsoft still not close to the highs. Netflix, that one recovered. Nvidia, close. This one's going to be close. It did though. It got halfway back. Okay. By the way, if Nvidia cracks these highs, tell me, do you know what the percentage is, Frank? If from this low that we had on that Monday open, if Nvidia cracks the highs, what is that percent?
I don't know.
50%. Is that freaking crazy, dude? That we had a 35% haircut on Nvidia and it'd have to go 50+% to rally to get back to all-time highs. But it could. Like, unbelievable volatility for a stock that's one of the top 5, top 3, was top 1, which I did say this. I did say that it'd be funny if Nvidia hits number 1 in the world and then the market tops. Kind of happened. But
yeah,
I didn't call it.
If we go back to the highs, though, that's not a good sign, I don't think.
No, I don't think so either. I think that's a good time to short it, to be honest. I think in the near term, like I would possibly short Nvidia because, look, Nvidia. Here's what I think. Nvidia is going to stay right here until the end of August because we have earnings at the end of August. I don't think Nvidia is going to be near the highs or near the lows. I think it's going to stay right here. So guess what? You and I are going to be doing that last week of August on the 28th when we have earnings, looking to see if Nvidia wants to go somewhere. Maybe it does. Maybe it doesn't. You know. So like. Right now, I mean, I don't know if I could. I may be able to take this trade prior to earnings, but if I did an iron condor, I guess I'll look and see. Let's see it. Let's see what it looks like. So if I were to sell a 140 and sell a 90, do I get any premium for that? Let's find out. So Nvidia earnings is the 28th. So we have 28th is Wednesday. So I'd probably have to cut this expiration back through Jackson Hole, which would be the 23rd. So if I were to sell the 140 and sell the 90, IV is still 67. So if I sell the 90, oh my gosh, dude, 13 cents. Never mind. 140, 10 cents. Frank, for an undefined risk trade on Nvidia that ties up $10,000 in buying power, I can make $22 of profit.
No. No.
I'd say no thanks on that trade. That's ridiculous, dude. Like even with an IV at 67, this trade is garbage. So never mind. So an iron condor is going to be even worse than that. No thanks. So it is what it is. But I'm wondering
I
if
just think that if we go back to the highs, I don't know, that is a short opportunity. I think the investors are expecting the Fed to do too much. I think they're just expecting them to come in and save us. Like, to their point, they usually do, but I don't know.
but
50 basis.
it's not in a good way, dude. Not in a good. Not in a good way. If the Fed were to cut more, this go around, if the Fed cuts more, I think, and I've said this, I think my concern is that if the Fed were to cut more, the market doesn't respond the way it always does, right? When the Fed cuts, the market usually responds pretty favorably, and this might be the time that the market doesn't care. It's like it's not good enough because the Fed is cutting with all these other concerns. Inflation's still sticky. They're being a little bit more, they're able to cut a little bit, but like if consumption is down, employment's looking softer. I mean, they're cutting for the wrong reasons, and I'm telling you, man, if you tip the scales like 51% that the market thinks we're going into recession, the market's going to price it in before we actually hit it. Before the headlines actually read, we're in a recession. Before we have 2 quarters of GDP, we're in a recession. The market's going to freaking dump. Like that's the beautiful thing about the market is like 6 to 8 months out, it's going to price in whatever it thinks the new momentum is. And so if the market's sensing recession, we're going to see it in price. So right now it's like, that's what I'm saying. It's like red light, green light, where the market's not quite sure. Maybe there's enough data to kind of keep things stable, but earnings season is wrapping up here for Q2. All we have is Jackson Hole. We go into a rate cut cycle for September. Seasonality wise, do we expect a lot of good things to happen here? Seasonality wise, out of the month to month? Not really, right? August and September usually are very bad for the stock market. So SPX here, okay. September and October are both like the roughest months. So, I mean, you could argue like go hibernate for the next 45 to 60 days. Hope the market doesn't kill itself and fall off a cliff. And if you survive September, October, then maybe we can still have a rally by the end of the year. But I think the question is like August to me, just like I said in Forex, August to me feels like it's a transition month. And I want to open up a fresh workspace because my chart's getting a little messy. But rather than us sitting here and calling the top, okay, I think if you're going to be a seller, okay, the cleanest sell trade right now on these markets would be if the SPY breaks below that trend line, you could be a seller. Okay, if you wanted to be a little bit more aggressive, I would say if the SPY came back to this same high right here. So this area to me is where I'm looking to sell. I'm looking to sell the SPY in here to kind of catch a top and see if I can get this back down, not necessarily all the way back down to the lows, but maybe a, up and down and then just, I don't know, just noise, So that's one way. And then the other trend line that we looked at would be this one. And you can't make a decision on this because if we break this trend line, does this actually mean we're going higher? Maybe.
Not necessarily.
It's too aggressive, dude. Like you can't look at this and be like, it's going up. It's like it doesn't mean that at all because we could just come back to this candle and this could be high to low, pull back into balance, and then we have another dump lower, and all of a sudden this becomes a channel. So if let's take a trip back to 2022. 2022 was this. 2022 is that before we put in a bottom. So is this what we deal with? Is we had our big like 10% sell off, and then the market kind of organizes additional like you have some nice pullbacks, you have some nice falls, but look at that volatility, right? If you go up 7, 8, 9% and then fall 10%, go up another 7, 8, 9%, fall 10%, we might have a controlled maybe, because at this point like the JPY stuff is unraveled. I don't think the volatility would go up to 65 again. 2022, did the VIX ever get above 40? Not once. Even though that was a 25 to 35% correction in the stock market between the S&P and the NASDAQ, we were down a ton in 2022, but the VIX never got over 40. So we could have like controlled selling, maybe a bit of a bear slide here the next couple months. But to me, the tell is if we can't get above 552, okay, if we can't get above 552, I'm much rather looking to sell. But I don't know if we're taking out lows either, dude. That's it. We don't know that, right? We don't know that. So I'm just trying to keep the
No.
charts a little cleaner because I've got crap all over the place. I realize that I can see through the charts, but I get it. Like, it looks messy.
We
So
don't know.
we don't
I
know,
mean,
and
yeah, we
nobody
don't know,
does.
but I mean, I still have a slight hunch that we will take out the lows. And I think that
Yeah. I mean, I hope we do. Well, I don't want to say that. I hope we don't, but I think we should.
I
think
think
we
that
should.
we're going to get to a range on the S&P and the Nas where we think where investors are going to get comfortable again, and that's when everything's going to fall. So we break this level, we come up here, we close above, we're looking good, nearing the highs. I think it's going to get ridiculous where we're going to, at this point, I think it's going to get to that area where we're like, okay, so we're going to test the all-time highs again, and then we don't, and then we test those lows. But honestly, we are talking about selling options, but I think that volatility is going to pick up, even if the overall trend is kind of 2% one way or the other after some big moves. I think intraday or 1 day out or 1 week out, you're going to get some big moves. So I don't know. The other week I bought puts way out of the money that really worked out. So why not just keep doing that? Why not look for upside on, on slow, steady gains or rips higher?
Yep.
As well as looking at out of the money puts or short calls that you think are just going to work out, because I know that my puts are expiring worthless. I have out of the money puts that I get for 4 cents, 10 cents, whatever. They can change drastically. Even if the market comes down like 1%, 2%, those 4 cents will be worth like 7 to 10 cents or 15 cents or whatever, which would be nice. Act as a little hedge. But why not take those small positions if we're worried about this sort of move, instead of just simply selling option positions that you have?
Yeah, I think, I mean, it depends on how active and how short term. I mean, if you're too short term, I look at hedges, or if you're kind of playing like the slow upside but the fast downside, I mean, there's not going to be
Yeah,
winners all
that's
across
what
the
it is.
board, right? Like, you're going to sacrifice some profit somewhere. You're going to so either you win on the upside and you sacrifice those cheap hedges, or you win on the downside and you sacrifice, maybe a little bit of the defense in your portfolio. But it's just, it depends on how active you want to be. I mean, I think this. I'm just thinking more and more about, I want to get long in a futures contract just because it's leveraged, and I just think, like, let's go to ES for a second. I mean, part of me right now, it's like, part of me believes that we are going to get back to the low before the end of the year. And so that futures feed, for example, I mean, now that I see this on the 4-hour time frame, that looks pretty good, dude. I mean, if we're going to respond to some technicals, I almost think that the ES feed is easier to read than the SPY in the SPX, just because we have gaps and intraday stuff. But like I said, this is the big inefficiency that the market might come and find, but that's where the resistance to me is sitting. And it just so happens to be right at the backside of that trend line, where I wouldn't mind getting long a put towards that low. Now, to go out, this is the hard part, is how much time do I want to pay for? If I said that the futures feed, down to like 51.90, let's look at ES out to 51.90. Okay. So it's going to cost money.
It could be like a week out if we're talking about big sell-offs.
I can't do that, dude. Like, I can't go out a week and feel confident about that trade. Like, it's way out of the money and it's dirt cheap. But if I went out a week and all price did was this, if all price did was this for the next week, that thing is worthless. Now, it won't cost anything, but it'll be a loss. Like, I'll look at it, right? So let's go to the 20. Let's see, it's going to be the 23rd on Friday, right? Next week. So if I go out to the 23rd, and I'm going to see if we're going to retest. I'm not even going to say the wick low. Okay, I'm not going to say the wick low that was Sunday night. This is Monday's morning's open. But if we get back to like 51.90, let's take a look at that. So we'll go out a week, 51.90. If I buy a put 51.90. So, excuse me, on a futures contract, I can buy a put for dirt cheap, but I'm going out to an expiration that, I mean, it's a 6 delta. That price would have to drop pretty aggressively. And look, the upside here is ridiculous. I can make a ton of money on this trade. The problem is if I don't time it well enough, I'm just losing. All right. So I don't know, man. I guess I'm more interested in what have we seen. If we're going to see a bit of a down spill in the market, what have we typically seen? It's usually like something where, summertime, like July, August, the market starts to top over. August and September starts to get a little bit worse. September, October, it really gets kind of bad. October's been like the pivotal month. If we're going to see a bull market, it's like end of October, early November. The last couple of years, it's been that type of seasonality where October is not like a great month. Last year, when the market ripped like crazy, it was like end of the month into November. So I don't know, man. I think I'm willing to pay a little bit more to buy myself the time to still have the trade that like gives me a chance, because look, I'll pay for the time, but it gives me just a bigger window to be right. I think so. Let me see how much more expensive it is. But if I went to, like, this is not a bad trade, Frank. Like, okay, so $5 is going to cost you about $250. So 510. So for $255, you could turn that conceivably into, let's say that by next week, okay? By next week, you're trading at the money, okay? So if you're at the money, you're going to turn a $5 debit into a $50 credit. So you just went from risking $250 to making $2,500 if we get to your price. So as far as a reward to risk, it's a huge reward to risk because it's 10-1. It's freaking awesome. But I'm not comfortable going out only a week. There's too much potential noise of like the market just kind of, look, the market got punched in the mouth, right? So this huge drop and this little recovery, and we're back around 50%. I could just see the market just not wanting to do anything. It doesn't know what it wants to do. It doesn't know if it's safe to go up. It doesn't know if it's going to crash. I think the market just stays here and probably drives everybody crazy, I think.
Right. So we do have to go, but I did want to say,
okay.
I wanted to say something about the futures. If you want to go like short term, you could do like a weekly broken wing butterfly up at this, I guess, 200 simple moving average, 200 day.
Okay.
You collect premium during that week, and if it doesn't get up there, you can go next week, because maybe this is where we top out, and if it closes there, you get,
that's
that
not a
payout.
bad.
But
yeah, that's not a bad trade. Give me a pin price on that. 55.50. Would that be okay?
I'll give. How about let's talk about it after?
Yeah. Okay.
And let's transition so Nick Phillips can get on.
Okay.
But I'll send you over what I'm looking at.
All right, sounds good. All right, Nick, you got the show. Thanks, Frank.
Yep.
Talk to you in a second.
Thank you.
Bye.
See y'all.
Attention A1 Trading Show fans. If you're interested in getting free access to the EdgeFinder or our premium trade alerts, listen up. For a limited time, our show's partnered broker 8cap is giving out free access to our products when you sign up for a new trading account with them. If you already have a broker, you may want to consider switching to 8cap because of their low trading costs, a wide range of trading assets, and their amazing customer support. If you'd like to get access to our software and Discord server for free, click the link being dropped in the chat right now and ask one of our team members for more information. Don't miss your chance for free products and an award-winning broker. Now, back to the A1 Trading Show.
Good morning. Good morning. Welcome to this segment of the A1 Trading Show. It's been a bit of a crazy week for me personally in the market. It's been a bit of a whirlwind week. I trade specific pieces of red folder news from all the major currencies. So let's just take a look at kind of how my week has been. It has been not much sleep. There hasn't been much room for sleep, I should say. So we started off with Australian dollar wage prices. That piece that had dropped on Monday during Asia session. So that was about 9:15 my time. And then a few hours later, normally I'd be going to bed around this time. A few hours later, we had pound employment change information. So we had Asia session, then London session. didn't trade US PPI on Tuesday. I tend to not trade US PPI, so I didn't have anything to trade during New York yesterday. But I also had Asia session. Excuse me. All of a sudden, got a tickle in my throat. Asia session last night, followed by London session this morning, and then New York session this morning. And then we have Asia session also tonight. Tokyo live for odd employment change. London session tomorrow morning, New York session tomorrow morning, and then I'm off, and I won't be trading again for another year. I'm just kidding, but this week is it's a marathon. We're having to treat our sleep like it's a scheduled routine, but a broken scheduled routine of we got to get 3 hours here, wake up, get 3 more hours, wake up, and survive for the day on that. Last night, I ended up not getting much at all because I was trying to trade some of the CPI momentum and ended up waiting around for about 2 hours after the CPI data dropped and got one decent little trade out of it, but nothing major. Anyways, whirlwind, absolutely crazy week. So let's dive in here real quick before we hit the charts. Let's dive in here to some of the data. I'm going to work backwards through the data that I've been paying attention to this week. So starting today with the CPI information. Let me make sure you guys can see this. Yes, you can. Okay. Starting today with the CPI, mostly as expected. The actual figure here coming out right in line with the forecast for core month over month and core year over year and headline month over month. The only number not coming out at the forecast would be the headline year over year. However, it did not break outside of the bank range low figure, so there really wasn't a surprise to the markets here. So CPI was a no trade for us, as expected, no identifiable edge, and we can see the dollar reaction for like first hour afterwards is pretty mixed. This is a pretty mixed reaction. You have the market initially spiking down, then spiking up in the first 5 minutes, and then spiking down, and then spiking up, and then ultimately finding some downward movement. But this first hour ahead of New York Open, just markets absolutely unsure of what to do with that CPI information. Okay, moving on to this earlier this morning, pound CPI. Pound CPI came out, you can see it right across the board, slightly lower than forecasted for most of these figures, but not outside of these bank range lows. We did get CPI services month over month and year over year that came out outside of these lows. But of all the data that we got out of the pound this morning, the services month over month and year over year were sort of the least important. We did see a bit of an interesting reaction from the pound this morning as well. That data hit the. We had an initial 5-minute closure to the downside, but since then we've really not continued that move. So this just goes to read sort of my opinion of this, which is what led me to ultimately deciding to walk away. I grabbed a small trade somewhere here this morning, but I ultimately ended up walking away with not much in profit because I did not expect a sustained downside move out of this data this morning. Most of it was in range, just slightly lower than the average forecast, and I didn't have much conviction the services was going to really take hold of the market. So small trade there, but nothing major. All right, walking back before that, what did we have? Let me see. NZD rate cut, which I don't believe I have anything in this commentary section on the rate cuts. Over here to this follow-up. So the Reserve Bank of New Zealand surprised the markets with a rate cut yesterday. I say surprised. The money markets were priced at about 75% chance of a cut. The forecast that we were getting across all major news outlets was a hold. So we got a price cut. The biggest change for yesterday, aside from the cut was a massive surprise for New Zealand. But these over-the-counter rates, the interest rate projections also changed for year end. So back in May, we had substantially different interest rate projections for the rest of this year and next year. Let me actually see if I can pull that up real quick. Give me 1 second here. OCR dates, past OCR announcements. Let's go to May. May 22nd. May 22nd. Okay, here we go. So let's do a little bit of comparing and contrasting, shall we? I believe we got to go to basically the back of the book here. Appendices, page 50. All right, so in May, the forecast for the rest of the year was no cuts, actually hikes pricing in to the outlook for the rest of the year. So by the end of this year, back in May, the Reserve Bank of New Zealand was projecting 5.7 as their interest rate. Now they are projecting 4.9. So almost a whole percent in the opposite direction, a very drastic shift in sentiment from the Reserve Bank of New Zealand. Beyond that, 2025, by year end, they were projecting 3.8 at this meeting. At the last meeting, they're projecting 5.1 by the end of 2025. So we did not, the RBNZ was not projecting any rate cuts as of May until the latter half of 2025. We were going to get some hikes and then some gradual cuts at the beginning of next year. But the cuts themselves, let me rephrase that. The markets were not expecting any cuts from our current levels. The Reserve Bank of New Zealand was not expecting any cuts from the current levels until September of next year. They were going to raise a little bit, hold, raise, start cuts at the beginning of 2025, ultimately leading us to below our current standing, or what was our current standing, the latter half of next year. That changed drastically with this one print. This today or yesterday's RBNZ was last night, Tuesday night. Drastic change. We are now seeing a 3 handle on the interest rate expectation for 2025. Now, that begs to the question of whether or not RBNZ is getting it drastically right or drastically wrong every time. This is a very drastic change, a very solid shift out of the New Zealand dollar or the Reserve Bank of New Zealand for their future outlook. So for me, I'm going to be looking at New Zealand dollar weakness for the foreseeable future. It's going to be a bit of a challenge trading it on the futures contracts because it's paired up against the US dollar, which I'm also seeing as potentially weak. So should be interesting. I think some of that collective dovishness should cancel out. It should sort of bring some neutrality to the pair, which will make it a decent opportunity for me anyways to trade off of any economic data, whether that's in New Zealand economic data or US economic data. Those two currencies both being weak, is that any kind of their in my opinion, the neutrality going into any data is going to be present. So it makes trading upward surprises easy and downward surprises easy. All right, moving on. before the NZD cuts, we had GBP unemployment or employment data, which was again a mixed bag. So, oh, that's CPI. So a mixed bag here on unemployment. The unemployment rate came out lower than the lower than the forecast. So a big surprise on unemployment rate and employment change. However, the weekly earnings, it didn't surprise to the downside. It came out as expected and lower than the forecast, not lower than the expectation, but just red enough to make me not really like it, especially due to the fact that the ONS has made it clear since last winter, that their statistical data collecting methods, they faced some challenges last fall. In about October, a bunch of the members that they polled for the survey did not respond. So they started to create new methods of collecting the data and have essentially, communicated that data cannot be relied upon until about November this year. And weekly earnings is not affected by that data at all. So when it comes to trading pound employment data right now, we're really putting a lot more weight behind the earnings portion of the data set, as opposed to the employment change and the unemployment rate, even though this pointed towards pound strength with a pretty substantial surprise. My conviction for trading it was low because of the mixed nature that the earnings presented, and the sort of uncredibility of the unemployment rate and the employment change itself. So bit of a mixed bag, no trade there. Then wage prices, you can guess it. It was not an enchilada for us this week, mixed bag. Wage, just looking at even at business conditions, just looking at wage price index quarter over quarter and year over year, zero surprise. It came out the quarter over quarter hit the low of the range. The year over year hit sort of right at the previous, right near the middle of the range, just above the forecast. So we have one piece of data pointing us towards a bit of a weaker Australian dollar and one bit of data pointing us to a bit of stronger Australian dollar. No trade. So far we've had mixed data, a dovish NZD, decent opportunity situation, mostly as expected pound CPI and mostly as expected USD CPI. So it's been a lot of data and a lot of nothing data this week. So it's made for a very interesting week. Let's jump into some charts here and see what's going on with the Doxy DXY. For those of you that it drives crazy when I say Doxy. Down on the day, the CPI catalyst not really, I guess kind of only coming back into play, but is this move being faded right now? Sort of, kind of. I'm a dollar bear right now, so I am just specifically looking for reasons to sell it more often than I'm looking to buy it currently. There are analysts calling for emergency rate cuts out of the economy right now, and this was before the CPI print. What we were seeing some last week and some the week before, with a bunch of the risk-off sentiment hitting the markets, was people getting scared, investors calling for surprise rate cuts, and then markets beginning to send a lot heavier rate cut behavior out of the Fed for the year than we've seen pretty much for the last 3 months. So big dollar bear right now. It's just a matter of finding good entries for me. I am not interested in getting involved until I have a piece of data that points me in a solid direction. Let's back out here real quick and just take an overall look. We are at a pretty decent little level of support here where price rebounded back in March, kind of bounced off of this area, pushed up into some of these, tried to tap into these 107 highs. So definitely an interesting area for price to potentially react from. We could see let's see what next week is bringing. We'll go the next 2 weeks. Okay, so next week is FOMC meeting minutes. Probably going to see some volatility out of that. I don't know if we'll see any sustained moves from that. Some PMIs, unemployment information, Jackson Hole Symposium next weekend. The following week, really the only thing that's going to matter, not the only thing that's going to matter per se, but the only thing I really care about the following week is going to be PCE. So I could totally see the next 2 weeks out of the doxy being maybe some relief. Like next week we get some relief here, and then the next week maybe some more relief here, and then we follow it up. Let's go to the next 2 weeks. What do we have? NFP week, ISM services PMI, manufacturing PMI. So I can see maybe with some continued weakness out of the dollar going into September, I could see the first week of September, kind of continuing this downward move. Yeah, so can't 100% predict that, but I can definitely see a little bit of a relief rally. It would most likely look like a bunch of consolidation on, the 4-hour time frame. All right, New Zealand dollar weakness after the rate decision. So this was the 4-hour candle from the rate cut plus the OCR projections. I think we are I don't want to say we're not stretched far enough to the downside for data. Let me back up. That is exactly what I think. My problem with this is timing. I think we still have more downside out of New Zealand dollar based off of their projections and the surprise cut. Governor Orr mentioned a couple times during the press conference last night that they are approaching monetary policy with caution, that their future decisions are going to be met with caution. However, that statement is sort of negated by the fact that they're calling for this many cuts by year end of next year. That doesn't seem cautious to me. That's the exact opposite of what seems like a much more cautious approach as of their May projections. So the May projections seem more cautious because they're holding higher rates. They're even raising rates slightly. And then going into next year, they're slowly cutting down. We don't even leave a 5 handle next year per the May rates. So even though Governor Orr is saying they're going to be approaching it cautiously, their projections are telling a little bit of a different story here. So we'll have to see. I do believe there's some more downside potential. It's just a matter of, is it going to go down from here, or are we going to see a little bit more of a relief rally here out of the New Zealand dollar before ultimately going off from some of these 6-1, 615 areas? That's going to be the challenge for navigating any potential scenarios out of New Zealand dollar. Again, I tend to mostly just trade off of data catalyst. So I'll be looking for opportunities to sell New Zealand dollar based on US data and New Zealand data. All right. All right, so I think I'm gonna move to some Q&A now. If you guys have any questions, go ahead and send them through as we wrap up the show here. Let's see. Emmanuel said, could gold retrace back to previous high? Am in long position. Just as a blanket statement here, the markets can do anything at any time. Just for a drastic example, let's say a brand new war pops off today, like something incredibly scary happens in the world right now. Two major nuclear superpowers go to war. Totally unpredictable. Nobody can foresee that coming. It just happens. It's a very quick, scary thing that the markets could begin pricing in a risk-off sentiment towards, in which case you should see gold fly to the upside, which would put it at touching your, these most recent highs. Now, as far as whether or not going to, it's kind of anybody's guess here. You said you're in a long position. I don't know where you got in long from. If you want to follow up with where you got in from, this is an interesting pattern. I tend to like this pattern as a reversal pattern. You see this bit of a consolidation area creates a sort of a double top, sort of a triple top situation here. And then it's got this support level. That support level has been broken to the downside. And now it's sort of like you got to ask yourself, okay, well, where's the next area of stability, like real stability out of gold? I would say in this area where we have all this bottom. So just mark up a little support zone here. Again, it just depends on where you're long from. I could totally see price continuing its fall down into here. I could see it doing this as well. Coming back in, retesting this area, previous support as a new resistance, and then tapping back down into this area, previous support. Is it going to act as support again? Don't really know, but we'll find out. But yeah, as far as staying in this, if you got in somewhere up here and you're in a long position, based on the technicals for me, again, it all depends on how long you're trying to hold. I mean, we're at all-time highs on gold. So trying to buy into highs, not ideal, right? You theoretically, if you're in long positions, the idea is to be in as low as you can and to sell as high as you can. And if you're buying at the highs, it's kind of a tough call to say that that's as low as you could have gotten in. Let's drop back to the 4-hour. So the way that I tend to read price action is like a story, right? So originally, price tapped into this area in the middle of July, fell away heavy from this area towards the end of July, tapped back in at the beginning of August, fell away heavy first week of August, rallied back up last week and the beginning of this week, and has retouched these highs, tried to touch this or tried to tap into this area, failed, tried to tap into this area, failed, another big strong push into this area, immediately rejected, and then a heavy volume candle to the downside out of gold. This tells me that as of this point in the game, the bears have taken control of this price action. Bulls tried to push it up, failed, tried to push up, failed, tried to push up, failed, and then were drastically overtaken by the bears. So I wouldn't personally, again, this is not investment advice, but for me, I'm not interested in long positions on gold from this area. All right, USD CHF. Zen wants me to check out USD CHF. So let's see here. Do a bit of a top-down analysis here. Weekly, sort of stuck in this little range here. Daily bearish. I need to remind myself again of some of the economic data situations out of the Swiss. I know I took a Swiss futures buy, which is essentially the opposite of USD CHF, just Swiss USD. When you're trading the futures contract, it can be a little confusing, but it's essentially the same chart, just inverted. So bearish territory, bearish price action. Bit of a stalemate here since last week. Haven't really moved. I wonder if that's reflected in the Doxy as well. Not really. Seems to see downside yesterday and today. Swiss stalling a bit. So that indicates to me when you have significant dollar downside, but something like the Swiss is not pushing up heavy, that tells me there's a little bit more of a cause for concern of weak Swiss as well. It's not written in stone. The Swiss volume could come in at the end of this week after CPI. I think a lot of this Swiss bullish price action that we had over the last couple of weeks was due to some of that risk off sentiment that the markets were experiencing. You saw savings like Swiss and the Japanese yen rallying to the upside off the backs of the recessionary fears. And what was interesting about the Doxy is we were getting softening economic data out of the dollar that was triggering recessionary fears. So it was a little hectic to try to take sell on dollar pairs when the safe haven nature of the dollar, there was sort of this underlying thought process of if we're going heavy recessionary fears, the Doxy might start to pick up some safe haven flow activity. So yeah, it was a little interesting trying to trade that, but I believe that was the main cause for some of the Swiss action. It seems like some of the recessionary fears have dissipated a bit. I don't want to say they're completely gone. They've completely evaporated. If we look at stuff like stocks, we are fading a big portion of this move. I would say for something like S&P, which we tend to use as a gauge for the overall U.S. stock market, a break above this 5570 level, that's a pretty significant enough level that a break and sustained amount of trading above that level for me would be enough for me to consider the risk off market kind of dissipated, that people have relaxed, they've chilled out, they've realized the world isn't ending, that the economy isn't just going to explode, or not explode, I guess I should say implode, and we will have completely dissipated that risk off market, in which case I could see some Swiss downside, which would be USD. It would be USD CHF consolidation, honestly, because when you have two weak currencies, if they're both headed to the downside, one has to be significantly weaker than the other to continue getting downside move. So US dollar would need to come out and be significantly weaker than the Swiss in order to get downside momentum out of this pair. Vice versa, Swiss coming out drastically weaker than the US dollar, we could see some upside here out of USD CHF. As far as positioning goes right now, this one is tough. This one is not it's not an ideal situation for me. As far as anything I would be interested in trading, unless recessionary fears start to kick back in. If recessionary fears start to kick back in, I think selling USD CHF could be a good move. Again, that's still sort of tricky simply because of the safe haven nature of the USD. So there are times where, for me personally, I will tend to avoid something like USD Swiss if I don't have any real good reasons to trade the Swiss, right? Whereas like right now, 2 weeks ago, great reasons to be involved with the Swiss. Fantastic reasons. The risk off safe haven flows, it was just safe haven flows were dumping into Swiss. They were dumping into the yen. It was a perfect time to be involved selling US dollar against CHF. Now, not so much. It's kind of like that sentiment has seemed to dissipate. If it pops its ugly head back up, it might be worth taking a stab at. All right, what source shows the bank range assessment of upcoming cuts and hikes? So I have access to a Reuters terminal, which is typically it's like a I want to say like $20,000 or $30,000 a year program. I have access to it for a lot cheaper than that I share with my guys. The other way that you can get this is by going to Financial Juice. And if you type in, I think, features.financialjuice.com. Let's see. Hit articles. Day of the event. Financial Juice is usually pretty good about printing this stuff, and I believe I don't know if their support is available to free members. I have the paid version of support, so I can always hit them up and ask them for more range information, but I tend to get it here. But if you use something that's free like Financial Juice, their articles, you can go here and see US CPI for July year over year. They have their ranges printed here. So the top of the range, 3.1, 2.8. I think this calendar is already gone beyond it. So I've only got a streaming access to this. I can't scroll through it. But we can actually pull it up. $3,128 for year over year, year over year, 3,129. So they have. So this is the thing about the range numbers. They can differ from calendar to calendar. Most of them are relatively close enough to where it's not going to make too much of a difference. Something else that helps is having access to the paid version of Financial Juice, where once you get these numbers, to make it easy when it drops, you can input alerts here. And so let's say I'm just going to throw out some pretend numbers here because I don't remember the exact numbers off the top of my head. If CPI year over year prints greater than 3.8, which would be the top of my range, we're just going to say, I'll be looking for US dollar buys, and it'll print a buy alert right here. Vice versa, let's just say below 3.0 would be my sell trigger. You can save that, and it'll print either a buy or sell button right here as soon as the data drops. It helps because they color code red. It's obviously bad for the dollar. Green is good for the dollar. And then this gray white number is just as expected, no surprise, et cetera, et cetera. So Financial Juice is a great resource. Definitely check that out. I'm not seeing any more questions come through, guys. So with that, I believe I'm the last guest for the day. I'm going to go ahead and sign off for the show. If you guys have any questions, feel free to hit up anybody from A1 and from all of us here. Have a safe trading day.
Thanks for tuning in to today's A1 Trading Show. Make sure to subscribe and to turn on post notifications so you don't miss the next one. Also, we're looking for more guests to come on the show. If you're comfortable being on camera, have trading experience, and you're looking to grow your audience exposure, we'd love to have you on. In the live stream chat and description below, we'll drop a link to apply to be a live stream guest and join in on the conversation. We hope to have you on soon. That's all for today. Trade safe, and we'll see you next time.